Warsh will say there's tremendous uncertainty.
I expect his tone will be a little bit more dovish.
Too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
The Fed's primary job is controlling inflation.
It's a long shot to call for a rate cut this year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Welcome to the Fed, Kevin Warsh. Markets looking for guidance from the new Fed chair with the central bank's rate decision coming later this afternoon. Investors bracing for more volatility as SpaceX surpasses Amazon as the world's fifth largest company, even with rates a bit higher than they had been, and with details emerging about the memorandum of understanding between the U.S. and Iran's financial benefits coming right now to Iran.
And you know what, Lisa? These stories are really intertwined. We might have easier inflation, not so high inflation, given the fact that we're going to see more oil flowing if the Strait of Hormuz does open in earnest. And also this administration, if you look at the MOU that our Bloomberg colleagues got a hold of, it looks like more Iranian crude is going to be able to get to market. We're going to see some sort of waivers on Iranian crude. So you're going to see oil prices potentially even lower than they are today.
And right now we're looking at oil prices that are about $6 to $9 above where they were before this conflict started on February 28th of this year, which raises this issue. Is the inflationary push that we've been seeing entirely due to the oil price increases, or is there something else behind it that Kevin Warsh has to pay a bit more attention to?
Well, this is going to be the big debate amongst him and his new colleagues as he takes over in the new era of Kevin Warsh. Part of it is going to be potentially they're going to see disinflation when it comes to the oil prices. And Citi yesterday was talking about how now they think there's a dovish risk to today's meeting because of what we're seeing in oil prices. But then there's the entire AI trade and build out and all the capital expenditures that is going to that trade. And in that, at least in the short term, I know what he's going to say long term, but in the short term, does that put inflationary pressures on this economy?
There are inflationary pressures in Elon Musk's bank account because right now we have seen SpaceX become the fifth largest company in the world, surpassing Amazon, even though people talk about the fact that its earnings are a fraction of Amazon's total earnings. And this is a new company less than a week after its IPO, and suddenly it has hurtled to almost $3 trillion valuation. Is this a bubble? Is this healthy? A lot of volatility in some of the memory stocks, the chip stocks over the past couple of days. SpaceX on poised for a fourth day of gains. At what point is it just too much?
Well, this is a big test to the market. How much can the market digest? Well, they're certainly digesting SpaceX. Are they going to digest more down the road the rest of this year when we get these liquidity events? When you talk about revenue of SpaceX, all the banks are saying it's going to be by 2030, maybe close to $500 billion. Well, Elon Musk says that is going to be $1 trillion. And if you believe in that, then potentially, where the stock price is trading right now makes more sense.
$1 trillion here, $1 trillion there. I think that right now Elon Musk's net worth is equal to about the total net worth of the five next richest people in the world. Right now we're looking at a market that is trying to inflect higher after yesterday's sell-off, led by the tech trade. This has been incredibly volatile. Yesterday it led the way down. Today it's leading the charge up. 0.4%, essentially flat on S&P, as flat on the Russell 2000. Can we get a broadening out? A lot of that is hinged to the bond trade. Do we see a rally into bonds after the news conference today? Who is the real Kevin Warsh? Remember, he was the youngest governor on the Federal Reserve Board back in 2006 when he was nominated under George Bush. Now, can he come out? Is he going to be hawkish the way he was, or is he going to be a dove? And if you bleed this through, ultimately, a lot of this has to do, as Annmarie was talking about, with the oil market, continuing to see it hold below $80 a barrel, although today, some questions about the MOU, whether it will stick, whether this is going to be something that can truly bring an inflection point for the conflict. Coming up this hour, George Goncalves of MUFG as Wall Street awaits a Fed rate decision. Stephen Cook of the Council on Foreign Relations as details of the U.S.-Iran truce emerge. And Henry Schwartz of CBOE as SpaceX soars past Amazon in market cap and trading rises to records. We begin this hour with stocks pushing higher. Treasuries holding steady as investors look to Kevin Warsh in his first moves as Fed chair. George Goncalves of MUFG writing, inflation concerns have been misplaced and rates may have seen the high prints for 26. That plus Warsh talking hikes off the table is about to unleash a bond rally. George joins us here this morning. George, great to see you.
Great to see you. Happy Fed Day.
Happy Fed Day, if you celebrate. A real question about how much this bond market can rally, given some of the inflationary pressures that, yes, are tied to oil, but also to some other issues as well.
Yeah, look, I think we are entering a summer of the bond market. I think we probably have seen the high prints for rates for a whole host of reasons. Look, oil prices, even in the midst of like literally 1 billion plus barrels of like less production getting through the Strait of Hormuz, managed to stay contained, right? So like this idea that you're going to see like a second wave of higher oil prices, I don't buy that. We don't buy that. We've been skeptical of the move in general, and inflation has largely come from the inflation from the oil shock, and then some second order round effects around. Some sort of pricing surcharges that were added to core prices. But in general, there's not really an inflation problem. Look at wages. Look at the way that the jobs market's behaving. It's still low-paying jobs. You're not seeing the sort of impulse of inflation. We think that we've kind of seen the highs in rates.
So we'll get to the economic discussion later, because there's a lot of divergence, even within pros, about exactly whether all of that is true in terms of wages and some other aspects. Do you think that Kevin Warsh truly can unleash the summer of bonds, given the fact that ultimately he's really squaring off against credibility on one hand and the overhang of what could be coming from the White House on the other?
Look, I think everyone has to temper their enthusiasm, including myself, because let's see what happens with the MOU, and if that gets done, it's a done deal by tomorrow, I think, right? Let's see. Or Friday. Let's see what happens there. But I think we're going to start off at 2 o'clock into 2:30, right? 2 o'clock, we're going to see. Did Kevin Warsh participate in the dot plot submission process? Like, that's going to be a big deal. And like, what are the dots telling us? Is there going to be like a removal of the easing bias? At first blush, I think this is going to be a kind of gradual toe in to becoming more like a changes at the Fed. But we don't see a drastic change at the Fed starting off today. But we do think that this is going to, he's going to start pivoting the Fed differently, and that's going to rearrange the focus and less forward guidance and a shift from focusing on other policies towards rate policy. I think that if inflation truly has peaked, if oil has peaked, if rates have peaked, then you're going to see, you can open up a window to cut rates at the end of the year.
Does the labor market need to weaken further? I mean, it's not weak now, but does it need to weaken for him to be able to cut interest rates?
I mean, I think we have to realize, we have to look back and see if the labor data actually is honest. We've had 2 years in a row of massive revisions every single year. The later we get in the year, we'll get more clarity on the true health of the jobs market. So it doesn't have to necessarily weaken. I think it just has to be a combination of it's not strong as people think it is, and two, the inflation story probably has peaked. It gives a window for the Fed to cut.
But they're not going to get back to the 2% target this year. So what is going to be the catalyst for them to really have that confidence, given the fact that there are a lot of members on the committee that are concerned that basically inflation prices are still too high and the labor market's not weak enough to have this bias?
I mean, look, there's a whole host of things. I mean, depending on how you look at the data and you look at real pure cores, you can get down towards mid twos by the end of the year, and into projecting into 2027, you can start to get into the twos. So I think it's not about, and plus, by the way, the Fed's eased in the last 2 years with inflation well above their target, right? So it's more about what's your understanding of neutral, and that's why I think today's we get the dot plot most likely, how the dot plot looks like, and then what is the glide path from this year, which we think they're going to remove the one potential cut that was in the last forecast or projections, and what is the path towards neutral? Because like they've been very gingerly moving up neutral rate to around 3 1/8. Are they going to move that up now at Kevin Warsh's first meeting? That would make no sense. So like they have to get down to neutral or redefine what neutral is.
Well, that's something people are looking for. What is inflation? If you could choose your inflation, is it an inflation target that we're going to care more about? I'll choose one inflation target. How about anyone who's invested either in Cursor or SpaceX and the new billionaires that have been minted? There's some inflation there. Given the fact that markets have absolutely been on a tear, how does that factor into the Fed's assessment of current conditions?
I mean, look, the going is great when it's going. The question is, how does it look like at the end of the year? We've had moments where we have these massive euphoric moves like we're in right now, and then they peter out and they burn out. So the question is if the momentum continues and stocks continue to make new highs, yes, then you're building in financial conditions easing, which takes pressure off the Fed to do anything. Or, like, at least in their calculus, it would be less of a need to ease. But that's really a judgment call on where you think markets are going to be at the end of the year.
If you put this another way, is the summer of the bond going to be also the summer of the stock? Because we've seen correlations between stocks and bonds essentially go to one, right? They've been directly correlated rather than inversely correlated as they have been historically. Why wouldn't any additional bond rally just continue to fuel an even bigger move in the equity market?
I mean, for like the long duration type sectors like technology, it probably would, right? I mean, until something breaks that correlation down completely, it probably would have kind of a self-reinforcing mechanism. But I do think that as we get towards the end of the year and we realize that our more optimistic outlook, collectively the market's more optimistic view on the macro is proven wrong, you're going to see the bond market end up winning out versus the stock market.
George, wonderful to see you. Thank you so much for being with us this morning. George Goncalves of MUFG on This Morning, where Kevin Warsh leads his tenure at the Federal Reserve. He was the youngest Fed governor back in 2006 when he first came in. He left in 2011 after the financial crisis. Now coming back at a moment of real question and given a reprieve, as you've mentioned before, AMH, given the fact that we've seen a subsiding in the tensions in the Middle East.
It's kind of a gift to him this week that he kicks off and you have Brent crude trading and holding as of yesterday under $80 a barrel. That is definitely going to be a massive sigh of relief for Kevin Warsh as he greets the press and his colleagues. Bank of America has a note out this morning, is he a hawk, dove, or none of the above? I love how you've been saying, will the real Kevin Warsh stand up? Because when he was governor and the youngest governor, he was an inflation hawk. And then, of course, during his interview process with the president, he leaned very dovish. I think the world really wants to understand where he sees the economy and the Fed going forward.
Yeah, a lot of change between 35 and, however many years later. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn.
Lisa, thank you. Details are emerging of the US-Iran interim peace deal. The draft of the Memorandum of Understanding shows Iran is set to receive sanctions waivers that allow it to sell oil immediately, with other financial incentives deferred. SpaceX overtaking Amazon in value to become the 5th largest stock in the world. Shares closed nearly 5% higher, pushing its market cap to $2.65 trillion. At the stock's intraday high, SpaceX topped Microsoft to briefly become the world's 4th largest stock. The NBA Finals drawing a massive audience of 20.6 million viewers per game, making it the most watched since 1998. Game 5 scored the highest viewership in the series with 24.5 million people watching as the Knicks beat the Spurs to win their first championship in 53 years. That's your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Did you see people with televisions on their heads and broadcasting it on the walls of buildings?
Yes, my favorite is projecting it onto buildings, but you know what's even better than watching it on TV?
Oh, God. Don't even start it. Don't even start it. She still has the glow. Many days later. Up next, learning the details of the deal.
We just signed a deal with Iran. Here's what it says. Iran will never have a nuclear weapon. In addition to that, the Strait is going to be open toll-free. We're focused on Iran. That's going to be in the rear view mirror.
Stephen Cook of the Council on Foreign Relations joins next. This is Bloomberg Surveillance. Good morning. Trying to get a bit of a gain this morning after yesterday seeing a decline led by the tech stocks, led by the memory chips, led by some of the high flyers that we've seen really lead the charge up on up days and lead the charge down on down days today. A rare respite from some of that incredible volatility, at least at the headline level, essentially flat on S&P futures, seeing just a little bit of dollar strength. And this all being led by what's going on in the crude space. Crude essentially flat up about 1/3%, although still far below $80 a barrel on WTI, $76.33. Really notable given how much potentially has to be brought back online. In the yield space, 10-year yields 4.43%. Down just a touch this morning ahead of that Fed meeting. A real question for Kevin Warsh. How much does this actually give him a reprieve, given this concern that inflation's coming from many places? It seems like this morning, everyone's saying, actually, maybe it really is just an oil story.
Potentially, it's just an oil story right now, but you have to think about some of the other price pressures we are seeing in this economy when it comes to the AI build-out. We're obviously seeing it in the financial markets, but we're seeing some of that as well when it comes to the real economy. But this is a gift for him to walk into this meeting and say, look, as many people have said, like tariffs, you can look through energy price shocks. The issue is, of course, and you brought this up, how quickly do we get back to pre-conflict era of 20 million barrels a day floating through the Strait of Hormuz? Yeah. I'm told it's the start of a deal, and it's going to be a little bit messy.
We're getting some details, but really a question of whether this will stick and what exactly is all in that memorandum of understanding. Under surveillance this morning, learning the details of the deal.
We just signed a deal with Iran. Here's what it says. Iran will never have a nuclear weapon. In addition to that, the Strait is going to be open toll-free. We were focused on Iran. That's going to be in the back, in the rear view mirror. I'll go over the document with the media in a couple of days.
Here's the latest. The U.S. and Iran planning to formally sign a peace deal on Friday. The interim agreement set to bring major financial relief to Tehran. Bloomberg's Tyler Kendall joins us for more from Evian, France. Tyler, what do we know so far about this MOU?
Hey, Lisa, good morning. Well, according to a draft of the MOU seen by Bloomberg News, Iran is set to be able to immediately sell its oil to market once this deal is signed. For context here, the U.S. has long maintained that any financial relief for Iran would be conditioned and accrue based on progress and whether or not Iran is upholding its end of the deal. But this would be an immediate point that Iran would be able to access, as the U.S. Treasury Department is set to issue waivers for the export of Iranian crude and petrochemical products. In relation to this, the U.S. will also immediately lift its U.S. naval blockade even before the Strait of Hormuz is fully reopened, though the goal, of course, is to get the strait opened within the first 30 days of this ceasefire extension, which we know will take time considering that they still need to clear some mines that are in the strait. The MOU also outlines that there will be financing for about $300 billion that Iran can access in what is being called a development fund to help rebuild the country, though the draft text of the agreement does say that the actual vehicle, the mechanisms to deploy this still need to be worked out and would aim to be in the 60-day negotiating period. It is becoming clear that it seems that the U.S. is trying to use some carrots rather than sticks here to get Iran to the negotiating table for those potential curbs on its nuclear program, as the White House maintains that they are looking for a finalized deal that will include the retrieval of Iran's stockpile of highly enriched uranium, curbs on Iran's nuclear program when it comes to the moratorium potentially on uranium enrichment, and also a very stringent inspection regime. Lisa, I'll put one other thing on your radar that potentially could complicate things. The text of the MOU does say that all the ceasefire will extend to the fighting in Lebanon as well, which would include Israel's front against the Iranian-backed militant group Hezbollah.
Tyler Kendall, thank you so much, as always, and we'll be catching up with you throughout the day. Stephen Cook of the Council on Foreign Relations writing, clearly the president was done and grabbed the deal before him. He is going to spin it as a victory, but it heavily favors Iran. This raises the question, why did we even go to war? Stephen joins us now for more. Stephen, why do you say that this is giving a win to Iran, given that we don't really know all the details yet?
Well, we have a fairly good sense of what is going to be in this deal based on what's been leaking out to Bloomberg, to Al Arabiya English, and a variety of other news outlets. And what we've seen so far would suggest that the Iranians will retain their right to enrich uranium. They'll be able to export oil immediately. The blockade will be lifted, although the Iranians are saying that there will be freedom of navigation through the Strait of Hormuz, but only for 60 days, and then they will levy a surcharge on transit through that waterway. Then, of course, there's nothing in the document about dismantling proxies. Yes, giving up the highly enriched uranium, but if they can enrich uranium, they can replace that stock of highly enriched uranium. Basically, the United States walks away from this with a lot of tactical battlefield achievements, but what can only be described as a strategic defeat.
Stephen, I also noticed that there is no language when it comes to Iran's ballistic missile program. Has the Trump administration given up their 3 red lines, which has always been, for years, nuclear, ballistic missiles, and money to proxies?
Yes, indeed, they have given it up. There is nothing that we know of regarding ballistic missiles. The United States and the Israelis did a lot of damage to the ballistic missile program, but the fear is that all of these resources that can flow into Iran, including the revenue from immediately exporting oil, can be devoted to reconstructing their capacity to build ballistic missiles. And it is one of the biggest ballistic missile programs in the world.
So the first point, and Tyler brought this up, according to the text Bloomberg has its hand on when it comes to the MOU, means that this would include a permanent end to the war on all fronts, quote, including Lebanon. Is Israel in agreement with this?
Absolutely not. The Israelis maintain that they will not give Tehran a veto over their security. But the Israelis are in a very difficult position. If Hezbollah attacks and the Israelis respond in a neighborhood of Beirut, for example, the Iranians will threaten to close the Strait of Hormuz once again, putting tremendous pressure on the global economy, as we've seen over the course of this war. But Israelis are in an election season, and Prime Minister Netanyahu is not going to give up the fight in Lebanon, which is actually quite popular among Israelis, as President Trump's popularity among Israelis has dropped precipitously in recent weeks.
There is a sense right now that everyone's buying time. It seems like the Iranian regime is buying time to try to survive. And it seems like some Middle Eastern nations are buying time to create alternative routes from the Strait of Hormuz to export some of their supplies. The UAE this morning saying that they're planning to cut the dependency on the Strait of Hormuz to zero, saying that even if the Strait of Hormuz does reopen, nothing will change that plan. How much is this going to be an interim type deal for months, maybe even years, trying to get enough through while nations in the region figure out workarounds?
Yeah, I think that's a very important point. The Emiratis and the Saudis certainly have options to build their way out of the Strait of Hormuz. The Qataris, the Kuwaitis, the Bahrainis absolutely do not have the ability to do what the Saudis and the Emiratis do, just by geography. So there'll be some countries that will be able to see this as an interim deal, and there are others that will put pressure on it in order to see through so that they can navigate through the Strait of Hormuz. Their economies are absolutely dependent upon it. There is a big question, though, whether we will get beyond this 60-day period of the MOU. There's lots to be worked out here, especially on the nuclear front. That took the Obama administration a couple of years. The president is suggesting that this is going to happen in 60 days. But overall, I think you're quite right, Lisa. The Strait of Hormuz is something that is now seen as a problem for countries in the region, and they're going to do everything possible they can to ease their reliance on it.
20 months. The JCPOA took 20 months. Stephen, how long do you think this could take?
Well, I think it can take quite some time, unless the president really goes back on his red lines. There's every indication to suggest that he will. And the U.S. intelligence community has warned the president that their Iranians are unlikely to give up their nuclear program.
Stephen Cook of the Council on Foreign Relations, thank you so much for being with us this morning. And we will keep parsing through that this morning. If you take a look at oil prices, they are essentially flat to where they were yesterday. I'm looking at WTI right now, $76.23. If you take a look at the beginning of the year, I mean, it's sort of interesting to look at a benchmark to in January when you saw oil prices hovering around that $55 a barrel mark. So we have priced in nearly $20 of premium. How much of that comes out? Do we get back to where we were before? And ultimately, how much of a risk premium, a la what Jeff Curry was talking about, remains baked into these prices?
This MOU is not just about reopening the Strait of Hormuz. According to the document we've seen, point 10 says regarding after the signing of this MOU, the U.S. Treasury is going to give Iran waivers to be able to export their crude. So it's not just that the Strait of Hormuz is reopening. It's the fact that they're going to be helping Iran export Iranian crude. So this is not the maximum pressure we've seen under the Trump administration of the past. And this is all to get the deal across the finish line. It is boosting at least expectations for a potential easing in some of the pressures on Kevin Warsh, on inflationary pressures ahead of the midterm elections. It has a real moment where we are currently. Is the inflationary pressure coming just from oil prices, or is it a broader base kind of push up? Coming up, Adam Posen of the Peterson Institute predicting a year-end rate hike from the Federal Reserve. Plus, Yahira Anand with your morning movers. SpaceX, once again, fourth straight day, moving up about 3% in pre-market trading, shooting for the moon.
a look at the broader indexes, it really doesn't give you a sense of just how much action there is under the surface. This morning, we're looking for maybe something of a reprieve from yesterday's declines, although we've really faded a lot of the earlier gains, at least in the S&P futures, down essentially now flat. NASDAQ, though, regaining about 0.5%, flat on the Russell 2000. Yesterday, we did see a decline led by big tech, but most S&P constituents were higher on the day. The KBW Banks Index was at a new record at the end of close yesterday. At the same time, you saw the SOX, the Philadelphia Semiconductor Index, plunging more than 4%. It just shows you the incredible volatility under the hood, where there is not volatility. With the MOVE Index falling to one of the lowest levels of the year, with just a real sense of steadiness, is the bond market. And you can see that this morning with a sense that, yes, yields have ground lower and they continue to do so, albeit higher than where they were to start the conflict. 10-year yields at 4.43%. That 2-year yield, 4.05%, continuing its inflection lower. And now we're pricing in about an 80% chance of a Fed rate hike for the remainder of this year. Does Kevin Warsh push back? Ultimately, that's a real question. Yes to dot or not to dot. Yes, some of these other questions. Does he reframe the way that we look at inflation? But does he allow this sort of hiking bias to remain in markets, even though we're still with an easing bias, at least on paper, at the Federal Reserve?
Right, and we spoke to Betsy Duke yesterday, former Fed governor, and she thinks actually the statement's going to be completely rewritten, given this is a new Warsh era at the Federal Reserve. But he has, of course, a difficult line to walk. Of course, he's going to have a message to the markets, but he also has to have, because he wants to anchor inflation expectations. At the same time, he's going to have a message to an audience of one. And that's the President of the United States, who obviously is giving him a little bit of reprieve when it comes to this deal. And you see yields lower because oil prices going much lower based on the fact that the president says the Strait of Hormuz will be reopening on Friday. I don't think anyone thinks we're getting 20 million barrels a day floating through on Friday, but this direction is that they want this to get back to pre-conflict levels, even so much that they're willing to give waivers to the regime once the deal is signed.
Take a look at oil prices, as Annmarie was just talking about. You can see them just flicking higher a touch this morning, but still far below where they have been. You can see WTI $76.25. Brent crude at $79, with the IEA seeing a potential supply glut coming as soon as 2027. 3 hours away from the cash open. Here are your morning movers with Yahira on it. Yahira.
Hi, Lisa. We start with SpaceX heading for a fourth straight session of gains with a move of 3.3% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, marking a remarkable start to its life as a public company. The rally has pushed SpaceX to a valuation bigger than Amazon's, and Microsoft is the next mega cap that it could surpass if this continues. Meanwhile, we are seeing a rebound in the chip stocks with names like Intel, Marvell, and AMD all higher in the pre-market after a day that saw the Philadelphia Semiconductor Index fall 5.7%. Marvell was the biggest decliner amid that pullback, now getting a 3% boost. Intel also seeing a boost up 4% after it announced production of its most advanced chip yet, as rumors continue to swirl about a future relationship with Apple, and this could be a step toward that. And we end on Lionsgate. Those shares are falling 5.9% in the pre-market after Netflix came out in disputed reports that it was interested in acquiring the studio. The stock had rallied on that speculation, giving all that back. But the idea was that Lionsgate could emerge as a potential target as we continue to see this wave of consolidation across the media industry after seeing Fox saying that it plans to acquire Roku, saying that earlier this week. Lisa.
Thank you so much, Yahira. On our radar this morning, the interim deal between the U.S. and Iran set to bring up major financial relief to Tehran. The deal will allow it to begin exporting oil immediately and give it access to a $300 billion development program. Elsewhere, SpaceX soaring out of the gate in its first 3 days of trading. Shares rallying a mere 49% since its IPO. Its valuation topping $2.6 trillion, overtaking Amazon as the world's fifth largest public company. And top AI executives are gathering alongside world leaders at the G7 in France. CEOs from OpenAI, Anthropic, and Google taking part in a lunch today. As AI rises to the top of the global agenda, the U.S. and the move on Mythos 5 and Fable 5 really setting a shockwave across the world, saying, hold on a second, this is a sovereign issue, not just potentially a technological one.
And already there was concerns in Europe about having too much dependence on US AI companies. Now that's been absolutely heightened, given the fact that you have these export controls on these two models coming out of Anthropic. At the same time, did you see the Semaphore report about Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent are talking about and trying to figure out how actually an equity stake or some sort of nationalization of Anthropic would look like. So Treasury Secretary favored using equity in AI firms to seed Trump accounts. The Commerce Secretary, Howard Lutnick's preference was that any equity be directed to a type of sovereign wealth fund. How is this the beginning of more we're going to see when it comes to the AI space from this administration?
There are two separate issues here that are important issues. On one hand, it's how does the broader public participate in what seems like a sea change that could potentially have malicious effects on the labor market, could potentially lead to some changes in composition there. The second thing is national security and questions about what this AI can do with respect to eating into some of the software holes and other bugs that this software is able to discover that other people really haven't. And those are two separate issues, a question of what this does to national security, a question of what this does to sort of popular support and popular prosperity. And both of those are at the top of mind this morning.
Well, if it's a national security issue, where are they with the other AI models? Where are they with OpenAI and XAI and some of these other models we see that everyone in the market says they are basically competing at the same sort of levels? Are we going to see export controls on them, or is this an Anthropic issue in itself? And we know that Dario Amodei is having a lot of problems with the DoD. The DoD has labeled Anthropic a supply chain risk. So this does feel a little bit messy. And does it just get, figured out because the United States government says we're taking a stake in it?
Well, meanwhile, we're going to hear maybe from Kevin Warsh what he expects to see from the AI outcropping, counting down to that Fed rate decision at 2 p.m. Chair Warsh's first press conference at 2:30 p.m. Adam Posen of the Peterson Institute writing, the statement will shift to a neutral bias. They won't hike before the election. They will hike in December 2026 and January of 27. Adam joins us now for more. Adam, always great to see you. Thanks for being with us. So what are you expecting to hear today from Kevin Warsh?
Thanks, Lisa, to you and Anne-Marie for having me back. I think Kevin is going to do, Chair Warsh is going to do something that he's very good at, which is say a lot of things that sound deep about monetary policy while not committing to anything. And I'm not saying that to be dismissive. That kind of worked for Greenspan, and Kevin has said repeatedly that's a model he has some sympathy for. As you quoted me, I think they're going to move the statement a tiny bit. There's the one passage everybody interprets for the bias, and I think they're going to move it to a neutral bias. In contrast to what you cited a minute ago, I don't see any way that they rewrite the statement in this amount of time. Everybody knew Kevin was going to be chair. Everybody knew the meeting was coming up. But you haven't been able for the chair to have more than a bilateral meeting with each member at best. So I can't imagine they've rewritten the statement.
Do you think that he will try to make a bold statement by, say, not putting a dot on the dot plot, not putting forward some sort of projection? Or do you think that he's going to try to toe the line and gain popular support on the FOMC?
I think both, actually. I think he is rightly, in my view, going to downplay the dots. The dots now, and have been for some time, like the monetary aggregates were after the 80s. They were something that nobody wanted to take away, even though they were not a predictor or indicator of much of anything. So I think it's entirely justified for him to say, I'm not putting up a dot. We're going to change that. But I also think that is not so bold. I think that's a reasonable communications improvement, just as his pressures to keep the cacophony of too many members speaking at once will kick in. But I don't think he's going to want to rock the committee. I expect him, again, to sort of dodge things and talk about not the meaning, not the word transitory, but he has the gift, in a sense, of the Iran deal. being that he has legitimate reason to say, let's wait and see, and the committee will live with that.
Yeah, and he has legitimate reason to say we can look through, at least right now, the energy shock price. So you think they're going to hike this year? How offsides is this going to put Kevin Warsh with the Trump administration?
Annmarie, I actually think it's a legitimate argument in theory to look through, but I don't think it's right in practice. As we've discussed before, as Peter Orszag and I have written about, there's a lot more inflation in the pipeline. We're still seeing the import prices go up. We're still seeing the lagged effects of tariffs, and the lags are because companies had to make really hard decisions. Similarly with migration issues, we're seeing a labor market that the Fed has repeatedly underestimated for 2+ years now. And we're seeing some erosion of inflation expectations. So I think he will argue that they can look through it. He will argue that productivity growth is going to disinflate, which for reasons you've discussed with others, doesn't seem imminent to me. But in the end, I guess the rate hikes are going to be inevitable. Chair Warsh, I do think, knows enough Fed history and cares enough about being a central banker that he will, in the end, say, I'd rather be Volcker or Greenspan than Arthur Burns. And B, that whatever President Trump says, and he may say some awful things, it will not be seen as effective if Trump tries to use lawfare against a second straight Fed chairman, particularly if inflation is rising.
Adam, what do you see as Jay Powell's role going to be, given the fact that he is sticking around?
I must admit, that's the forecast I got wrong, and I'm surprised by. I am very surprised former Chair Powell decided to stick around. And I think we have to take it at sort of face value. There's something there we don't see, which is that the lawfare threat to him and the Fed over the costs of the new building, making it criminal rather than political oversight, and the ongoing non-resolution of the, in my opinion, totally unjustified attack on Governor Cook. Jay obviously thinks there's more threat there than we realized. I expect him to stay totally mum on monetary policy issues.
Adam, just real quick here, do you expect to hear anything on the balance sheet today?
I expect some vague rhetoric later on the balance sheet and commit to shrinking it, but maybe the most you would get is him saying we're going to have a study group on it. I don't expect any firm commitments of any kind.
Adam Posen, thank you so much for being with us this morning. We'll all be watching, I'm sure. Adam Posen there of the Peterson Institute. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. BMW slashing its profitability forecast for the year due to worsening demand in China and negative sentiment from the war in the Middle East. The German automaker also expanding a cost-cutting program, leading to a one-time negative impact in the second half. Microsoft is considering using Chinese company DeepSeek to power its Copilot Co-work. Axios reporting the company is looking for cheaper alternatives to Anthropic and OpenAI as bills for compute skyrocket. And Lisa spoke to RBC CEO Dave McKay about the growing demand for artificial intelligence.
The push for AI and capacity, compute capacity, memory capacity is driving an insatiable appetite for all forms of capital, debt and equity.
McKay going on to say RBC has the capacity to meet lending demand for the AI build-out. And that is your Bloomberg Brief. Lisa.
Thank you so much. Right now, there is a bilateral meeting happening between President Trump and Egypt President Abdel Fattah el-Sisi as they meet at the sidelines of the G7 summit. We want to listen in.
Of your kind person, and thank you very much for allowing this opportunity despite all of the hard work and very busy schedule that you have, Mr. President.
هبدأ كلامي بالتهنئة والتهنئة الكبيرة جدا جدا على ما أنجزته فخامة الرئيس فيما يخص استعادة السلام في الشرق الأوسط والاستقرار.
Well, let me start by expressing big congratulations for the breakthrough that you have achieved, Mr. President, of restoring peace to the Middle East.
اسمح لي فخامة الرئيس إن بمجرد الإعلان عن هذا الاتفاق كان في تقدير كبير جدا لفخامة الرئيس، ولكن هذا التقدير زاد والإعجاب زاد في إدارة أزمة بمثل هذا المستوى، وإحنا مستنيين الإعلان عن هذا الاتفاق حتى يتم توجيه الشكر والتقدير علنا من خلال مؤسسة الرئاسة والدولة المصرية لشخصكم لهذا الاتفاق الذي أنجزتموه.
Once the deal was announced, there has been great appreciation, but the admiration has increased in this marvelous management of such crisis at the highest level.
Thank you.
We're waiting for the deal to be declared as a final deal, so that we can react appropriately and state our positive views and perspective of that great deal from the presidency and on behalf of the Egyptian people.
Up next, we'll be talking more about this and we'll be tracking it throughout the morning, particularly given its timing ahead of that MOU and the announcement of a potential signing of that deal on Friday. Key to hear both of those commentaries plus questions. Up next, we'll also be looking at SpaceX.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing.
They're totally overvalued, and it's so obvious. When you have these great winners, you have to let them run.
We're at the beginning of a new frontier here.
Henry Schwartz of the CBOE joins us next. This is Bloomberg. Coming into another day of volatility chop. We saw earlier futures inflecting higher. They're essentially flat on the S&P, although still maintaining about 0.1% gain. You're seeing a much bigger gain in the tech space with NASDAQ leading the charge once again. A little bit of, essentially stasis. The euro-dollar cross 116. 10-year yields just a little bit lower, nudging lower ahead of that FOMC meeting and press conference of Fed Chair Kevin Warsh later this afternoon. 10-year yields 4.43%, and crude essentially flat here at $76.28, with a real eye toward that MOU and what will happen on Friday. Under surveillance this morning, betting on SpaceX.
People are playing a little bit of hopscotch amongst the AI winners.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing.
They're totally overvalued, and it's so obvious. When you have these great winners, you have to let them run.
This company kind of feels like a growth company on steroids.
We're at the beginning of a new frontier here.
Here's the latest. SpaceX shares rising in their first 3 days of trading. Its market cap topping that of Amazon, making it the world's 5th largest stock. Options trading kicking off with a record volume. Henry Schwartz of CBOE writing, volatility skew indicates a high degree of upside interest, aka speculation, and is sharply inverted with higher upside call volatilities. Henry joins us now for more. Henry, can you just give us a sense, and welcome, of what yesterday was like, given that it was the first day of publicly listed options trading on SpaceX?
Well, absolutely. I mean, the options market's been setting records actually for 6 straight years. And I think everybody knew SpaceX was going to be big. And, we used an accelerated listing process to get options just 3 days after the IPO. And so that first day activity, we saw 1.77 million contracts trade. It was very interesting, basically, because we saw a very balanced flow between buyers and sellers. I mentioned that the volatility skew favors the upside. So basically, it implies a distribution where investors are actually more worried about a move to the upside than to the downside. We call that kind of a speculative setup, but we've actually seen a trend this year. About a third of the listed stocks out there kind of have this upside skew, which is actually what we saw during COVID as well. So it's not kind of unheard of, but it really does tell you what investors are thinking.
How are people using options right now? Are they using it to hedge positioning, or are they using it as retail investors to just get in as early as they can and bet, as you've been mentioning, to that upside volatility?
Well, it's a mix. So in terms of the larger trades, and we did see some very big trades yesterday, some 7,000 contract trades, which equivalent to 700,000 shares. We saw some big hedges. So we saw basically people buying puts and selling calls. And when the volatility shape favors the upside, that collar strategy is actually very attractive, because in some cases, I looked actually last night at the end of the day in the July options, you could buy the 180 put and sell the 235 call for a credit, okay, and with the stock around 201. So basically, you can actually, in that case, you keep about 18% of the upside and you get a 10% downside hedge. That's the power of kind of this upside skew. We don't see it very often, and you almost never see it in kind of at the index level.
How does this volume compare to what you've seen in other mega IPOs? Prior?
So I went back, and the best example I could find was Meta, which was Facebook back in 2012. It did about 370,000 contracts, so super highly anticipated. That was around 2.5% of the market at the time, and actually the volume that we saw in SpaceX yesterday was around 2.1% of the total market. So it was actually kind of comparable. I think though that seeing that that we're seeing basically put buyers, and also kind of people positioning, as you said, the other way to use options is basically for upside exposure and leverage. We're seeing kind of both of these things at the same time. It was in the top 3 yesterday, and I think it's probably going to stay in the top 2 or 3 for the rest of the year.
How has some of the retail trading changed the nature, just more broadly, of markets, of institutional investors that don't want to bet against them, of retail investors that follow certain popular names and want to get in, and different metrics than, say, traditional Wall Street analysts?
Well, retail used to be kind of a pretty small segment of the listed options world, maybe 10, 15%. That really changed during COVID. So now we can look at the data. We can see basically coming out of the big retail brokers, brokers like Robinhood and Schwab and Fidelity, they make up about 55% of the listed options market now, which is really kind of amazing. And they also show a very noticeable preference for short-dated options. So you've heard about the zero DTE phenomenon that's now been running for 4 years. So I wouldn't call it it's now very well established. In SpaceX yesterday, about 58% of the activity was in short-dated options that happened to expire this Thursday. Now, there's not even weekly options yet in SpaceX, although I believe we're going to see those very soon. And then, we've recently rolled out Monday, Wednesday, Friday options in some of the super liquid names. It looks like SpaceX is going to be a super liquid name, and so I expect we'll see that as well. But retail loves to trade the shorter-dated options. They're lower priced because they have a shorter kind of time span, and they also really let traders and investors position for exactly what they're expecting within the next, sometimes within the next hour.
Well, if someone has a better sense of what's going to happen in the next hour, honestly, kudos to them. Henry Schwartz, thank you so much for being with us. Henry Schwartz of CBOE here on SpaceX. We are getting some headlines from President Trump at the G7 summit in his discussion with the Egypt President El-Sisi. Annmarie, talking about how some of the reporting is false, particularly the $300 billion fund for Iran.
Right, and if you look at the memorandum of understanding, the text that we have, you could see at point 6, it says that there's going to be $300 billion in financing when it comes to the rehabilitation of Iran. The president also says this Iran MOU is not final. So are they still tweaking and working out some of these details? Of course, once it's signed, we should be able to see the text, and the president's going to have to answer a lot of questions. As we heard from Stephen Cook, this doesn't reach all of the U.S. red lines.
Yeah, well, there also are questions about what is and isn't accurate. President Trump saying that the U.S. is not investing 10 cents in Iran. They're not having to fund. They're not having a fund to invest in Iran. Is this about the U.S. financing of it? Is it about the access to financing by Iran? Clearly, it comes as there's some pushback. I mean, that's also part of this from within his own party about what exactly was conceded.
A lot of pushback, and a lot of individuals doesn't think it goes far enough. The U.S. made too many concessions, and obviously something the president does not like to hear because he got out of the agreement. A lot of people are likening this to the JCPOA.
We'll keep tracking those headlines as they come out. We'll also keep tracking SpaceX, as well as the rotational churn under the hood of this market. Coming up next, Mike Wilson of Morgan Stanley seeing that churn continuing. Bob McNally of Rapidan Energy on what to expect for oil prices. Former Boston Fed President Eric Rosengren and Holly Liss of BTG Pactual. This is Bloomberg Surveillance.
We continue to think third inning of this AI revolution.
It's still a bull market.
We're expecting a broadening out here.
Lower oil prices and lower inflation expectations is going to fuel, hopefully, more of a rotation.
The market is sensing an economy that's been very resilient.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. As we try to see a little bit of a gain following yesterday's declines, an incredibly volatile market with so many different pistons firing. On one hand, you have a question about Kevin Warsh, the new Fed chair, who is going to be stepping to the helm of his first meeting at the head. Later this afternoon, he will be giving a press conference following the FOMC's decision. Plus, you're potentially going to get some sort of decision on Iran and the United States. Right now, markets trying to shake it all off, looking through the noise, trying to take a look at positive gains in the tech-focused sector once again. Yields just a touch lower ahead of that Fed meeting at 4.43%. Crude prices, basically flat around here. Yes, they're up about 0.5%, but this isn't exactly anything to write home with, given the WTI trading at $76.36. A key question here, Annmarie, going into this meeting later this afternoon and then on Friday, is how much do lower oil prices really take the temperature off Fed Chair Kevin Warsh at a time when ultimately he has to make his stamp, given that this is his first speech?
Well, we just heard from Adam Posen, even though he thinks there's so much more inflation built into the system right now and he cannot look through the inflationary pressures. At the moment, in the short term, he can look through the energy price shock and say, well, look where oil prices are today. They're not $100, they're not $120 a barrel. We heard from Citigroup yesterday. Andrew Hollenhorst was on the program, and he thinks this is definitely going to help Kevin Warsh have a bit more of a dovish tilt today. And that's what everyone wants to hear. They want to hear how he speaks about the economy right now. And where is his tilt, since obviously they're going to keep rates on hold?
Well, SpaceX also rallying as the market seems wide open to IPOs of all types. Mergers and acquisitions are on fire. A sense that the financial markets are looking beyond and are not exactly looking for anything other than a Kevin Warsh that isn't going to stop the party. I mean, at what point does that enter into the consideration for this Federal Reserve?
Well, I think the Federal Reserve is going to be looking at the financial markets and saying, wow, they're off to the races. But of course, they also have to deal with an economy where, the labor market is okay, but the lower end of the K is still struggling, somewhat resilient. But after survey and polling you see, people are saying that they are having to dip into savings, and it's becoming much harder to keep up with price pressures.
Right now, we're looking at a market that on the surface looks fairly calm. Under the hood, keep watching some of the components. The KBW index, the bank index hit a new record yesterday. You saw more stocks gain than lose, even with declines on the benchmark indexes. You saw the semiconductor index plummet more than 5% yesterday. This morning, a bit of a rebound, although how much does this churn really indicate the path forward? Coming up, Mike Wilson of Morgan Stanley saying the bull market remains intact. Bob McNally of Rapidan Energy on uncertainties surrounding the deal between the U.S. and Iran. And former Boston Fed President Eric Rosengren as Chair Kevin Warsh presides over his first rate decision. We begin this hour with stocks rising, crude holding below $80 a barrel. Investors betting the U.S.-Iran deal to reopen the Strait of Hormuz will ease inflation concerns. Mike Wilson of Morgan Stanley writing, if there is a stable resolution in the Middle East, the bond market might walk back the Fed hike it's currently pricing in. Our conviction in the current bull market is intact. Mike joins us now for more. Mike, always great to see you. Thanks for being here. Let's start there. This idea of what a bull market means. Does it mean stocks just go up and to the right, or does this mean that there is some sort of cyclical undercurrent that shows an economy that truly is strengthening?
Well, let's go back to why we're in a bull market. It's all about the recovery from the rolling recession from a year ago, this operating leverage story. It's an earnings-driven bull market, right? So last year we got the multiple expansion in advance of, predicting that was going to happen. And as you recall, going into this year, there were a lot of kind of boo birds on the economy. People were very nervous about earnings. And we took the opposite view. I mean, nominal GDP is booming. It's 7 to 8%, and that's in place. So what's going on now is the multiples coming down, over the last 6 months, but the earnings have been so good that the market can still go up. So the next phase of the bull market at this stage typically is multiples are flat to down. Earnings come through as expected, but that can drive the stock market higher. And you get rotations to the areas where that earnings growth is underappreciated. And we think that yesterday's action is some evidence that maybe we're going to have that next rotation. We've already had several rotations this year, and we think that next rotation is in some of the areas you mentioned, like regional banks or consumer goods, which are asymmetrically, positively, inspired by oil prices coming down.
This has been the argument, that the rally in the equity market is entirely driven by fundamentals. And then SpaceX happened. How much does that kind of torpedo some of this thesis?
Well, look, markets are driven by fundamentals and animal spirits at the same time. You can't separate the two. They work in harmony. And so, yeah, I mean, is it a little frothy right now in certain areas? I mean, not necessarily. In areas, there's a lot of leverage in the system in semiconductors, okay, as an example. And that's coming out now a little bit. That's something we wrote about 2 weeks ago. To me, that's a healthy development as long as there's some place to go to, right? And so if there's no place to go to, then you can have a much more serious downturn that can turn into something that's more severe. We don't think that's happening. We think this is a normal transition. I want to go back once again to the beginning of the year when people were really, kind of pessimistic about growth. All we've seen this year is one rotation to the next from commodities. Okay, what happened this year? The Fed started printing money again, right? They did the RMP. That went into gold and silver stocks. Then it went into metals and rare earths. Then it went into energy stocks. Ended up in semiconductors. What do all those have in common? They're all commodities. Okay, so we've had a commodity rally basically bouncing around. And we think now we're going to get that broadening out story that was kind of going in January and February. Then it was halted by the war in Iran and the oil price spike and the repricing of the Fed. That now is subsiding. And so we can rotate back to some of these areas, pro-cyclical areas where the earnings are quite good, but they're underappreciated by the market.
What if we get a hawkish Kevin Warsh? Could that hurt the rotation?
Well, define hawkish Kevin Warsh. I mean, there's a couple ways to think about that. I think one is on the rate side, which I think is unlikely. Okay, the other's on the balance sheet. And we don't really know yet how he's going to want to position that. What I would say, and we wrote about this past week, is we already know what's happening, okay, which is that, Jay Powell left him a nice little package, which is that we're basically already seeing a deceleration in the RMP. Okay, so this is I've spent the last 2 years painstakingly trying to follow liquidity because that has been the main driver of kind of the animal spirits. And it was very positive at the beginning of the year when they restarted the RMP or asset purchases, and you had Treasury buybacks as well, and the SLR, increased some capital from the banks. That now is decelerating, right? You've gone from $40 billion a month in RMP to $10 billion a month. So that's a deceleration that's already in place. He's inheriting that. Is he going to come out and say, hey, we're going to increase that? Probably not. Is he going to say we're going to kill it? Probably not. But that deceleration is still in place. So I think we already know the answer to the test, okay? We're having a deceleration in liquidity in the moment, and that, to me, as we've been talking about, is sort of that's where you can have this sort of summer chop and summer correction. Like in this rotation yesterday, you said it already, we're getting a rotation in a down tape, okay? That's what I expect. We're going to get a down tape, but we're going to get a rotation, and that's a signal that we're seeing a leadership change.
What's the next risk on the horizon? The market was able to get through tariffs. Obviously, they're looking beyond now the conflict in Iran. For the rest of the year, is it just that potentially, I mean, the president says if he doesn't like what he sees in Iran, he'll start strikes again. Is that what potentially could be disruptive?
Well, I mean, your viewers probably won't like me saying this, but the markets moved past the war. They moved past tariffs a year ago. I remember in this time last year, June of 2025, everybody was still harping around tariffs, and we had said a month before, like, we've moved past tariffs. And so I feel it's the same thing. The other thing we learned in this war, which is amazing, okay, and I didn't expect this, is we just learned how much supply is out there, okay? I mean, like if you had the situation, this is a perfect storm. If you were an energy bull at the beginning of the year, by the way, energy stocks did incredibly well, and then they peaked literally the day of the attacks. So if you think about this event, you can only get to $125 in oil. And if you inflation adjust that, that's so far below where we were in the Russia-Ukraine war that began, 5 years ago. So that, to me, is just a really strong signal that the world is very resilient in terms of finding energy supply. China's a big part of that because of all the storage. But to me, it's a very bearish view for oil going forward.
You're pointing to something that's fascinating. Do you think that the trade in terms of bullish on commodities is ending? The idea that is going to be the outperforming sector in the rally, which has worked at least year to date?
Well, no, I think what I'm saying is that there are multiple types of commodities. And the reason why commodities have done so well this year at different times is because of the liquidity picture, which was so robust. We've written a lot about this the last 2 weeks, which is we think that between the Fed, the Treasury, and then the deregulation, they've added over $500 billion of liquidity to the system. So the whole rates argument is a sideshow to me. It's just a sideshow. I mean, it's been neutral. Yes, today, has the Fed been less dovish than expected at the beginning of the year, including me? Yes. Have they been way more dovish on balance sheet? Absolutely. And that has trumped, the negativity. Now, having said all that, multiples have come down this year. Okay, so multiples have come down because we're later in the earnings cycle. We're going to get our peak rate of change in earnings revisions too. So the combination of peak rate of change on earnings revisions, peak rate of change on liquidity tells me that we're in a corrective mode right now.
Well, I guess another way to ask this is, do you expect that Fed Chair Kevin Warsh to pull back some of this liquidity in the face of these pockets of froth, as you called them?
It's already happening. It's already happened. In other words, the path has already been set. We're having a deceleration, okay, or a deceleration on a rate of change of liquidity being provided to the market. That's what the market's picking up on now. The question, which you may or may not answer today, is what are you going to do going forward? Are you going to be active using the balance sheet in helping funding markets stabilize, which is what the last Fed chair did, Jay Powell, which is still there, by the way, so they're probably having a conversation about this. So, I think they will ultimately. Like, in other words, I think the Fed and Treasury will provide more liquidity if they need to. But right now they don't need to because bond volatility is totally under control. Funding markets are totally good. We're seeing issuance of equities and credit being absorbed. So they don't need to do anything right now. Why spend your bullets? But so there's a lesson in that. We kind of need the markets to pressure them to provide more liquidity. And the reason why we need more liquidity is because the economy is booming, okay? I mean, we're growing 7 to 8% nominally. That absorbs a lot of capital. Money supply is only growing 6. So that money's got to come from somewhere.
Do you think that the market could still hit your 8,000 target for the S&P by the year end if you do see a rotation away from some of the hyperscalers, away from some of the semiconductors, given how much they've rallied, given the proportion of them into the entire rally, and given how small the relative economy has gotten in response?
Yes, because I don't expect these stocks to correct more than whatever, 5-10%. I mean, they're going to correct and then they're going to come back. Like, I don't anticipate that this is the end of the AI CapEx cycle or the end of these stocks working. I'm just saying the relative outperformance doesn't make sense to me, given the relative earnings revisions in these other areas. And by the way, just a reminder, that happened at the beginning of the year. At the beginning of the year, these stocks were all underperforming. So, it's just the hot dot becomes all, the attention of the market goes right there. And I like to try and think 6 months in the future. Like, I try, my job is to tell you what's going to happen, not what is happening. Okay, that's harder. And so people don't like to do that, but I try to do that. And I'm telling you that I think we're going to get a rotation, but it doesn't kill the bull market.
Mike Wilson, such great perspective. Thank you so much for being with us.
Thank
Mike
you.
Wilson of Morgan Stanley joining us here in New York. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump telling reporters at the G7 summit reports of a $300 billion fund for Iran are false and that the U.S. will not invest, quote, 10 cents in the country. The president saying the memorandum of understanding reported by Bloomberg is not yet final, and he will share more details of the deal in a press conference today at 10:30 Eastern. Goldman Sachs marking an M&A record. According to Deal Logic, the bank has advised on more than $1 trillion worth of deals so far this year. That's the fastest any bank has ever reached the milestone. Democratic Senator Raphael Warnock criticizing Elon Musk's trillionaire status.
I think news of the first trillionaire in the world is not good news. I think that's bad news. It is a bright indication of growing wealth inequality in this country.
Warnock going on to say the tax system is structured for people like Elon Musk. And that is your Bloomberg brief. Lisa.
Thank you so much, Vonnie. Up next, pushing back on the details.
It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them. We'll go right back to dropping bombs right smack in the middle of their head.
Bob McNally of Rapidan Energy Group joins us next. This is Bloomberg Surveillance. Good morning. A lot on deck today with the first FOMC board meeting for Kevin Warsh as Fed Reserve Chairman. We're going to be getting that later today, and right now markets are pretty calm. S&P futures up about 0.1%. Real stasis in the euro-dollar cross at 116. 10-year yields inflecting just a little bit lower, 4.43%. And crude hovering around that $76 mark after plummeting from near $100 a barrel not so long ago as people look to Friday with that memorandum of understanding being called into question this morning, a question about how much this truce and, frankly, this resolution to the conflict can stick.
Well, we heard from the president in the last hour, speaking alongside the sidelines of the G7 in bilateral meetings, and he's basically saying he doesn't like what he sees out of Iran and the regime, that he's willing to go back to strikes again. So how it's been described to me is that it's the start of a very long process, and it's going to be a bit messy.
Yeah, under surveillance this morning, pushing back on the details.
No, it's not final. It's a memorandum of understanding. And if I don't like it, we'll go back to shooting at them, dropping bombs on their head. If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Here's the latest. President Donald Trump returning threats and pushing back on the details of the memorandum of understanding with Iran. Trump saying the deal is not final and fighting could continue. Bloomberg's Oliver Crook joins us now from the G7 summit in Evian, France. Ollie, what's the sense there on the ground in terms of what the resolution is and what some of the allies, how they feel about it?
Well, I think that overall everyone is going to be very relieved to think that, there is at least a window here for the end of the kinetic part of this war, the potential reopening of the Strait of Hormuz. The Europeans have put their hands up again to say, listen, that we were very happy to be active in the participating in the demining process of the Strait of Hormuz. This is something we understand from our sources that the United States has been receptive to. But of course, they're only willing to do that once you have a final peace agreement that they can feel is sturdy and that they can feel is reliable. And comments like that from the President of the United States potentially undermine some of that faith. In terms of how the Europeans feel more broadly about how sound this architecture is, whether or not this is better than the JCPOA, and you'll remember the Europeans were actually involved intensely in the negotiations on that. They're really coming back at the end of this. If the United States wants to use financial incentives, as it seems the 14-point memorandum is really leaning on, the Europeans will have to be a part of that conversation too. I think that here there are a ton of questions from European allies about how Trump is exactly seeing the so-called new regime in Iran. He said basically that the Iranians are on their third regime now, that of course the Iranians don't see it as a new regime. And there's some real questions here, I think, about how docile, how compliant, how willing the Iranians are going to be to comply with the wishes of the United States just for some of those financial rewards. Of course, the Iranians have had sanctions on them for a number of decades. And of course, the supreme leader, the new one, almost his entire family has been wiped out by the President of the United States. So I think a great deal of a lot of sort of optimism at the front end of this conversation and a lot of skepticism and a lot of questions on the back end.
Oliver Crook, thank you so much for being with us. Ollie there in Evian, France, for the G7 meeting. Crude, meanwhile, holding below $80 a barrel following reports that the U.S.-Iran deal will reopen the Strait of Hormuz. Bob McNally of Rapidan Energy Group writing, even if Hormuz tanker traffic resumes shortly, the risk of a summer or fall oil spike has not completely disappeared. Bob joins us now for more. Bob, great to see you. Thank you for being here. Let's just start with the move so far. Have you been surprised by how much of the risk premia have been taken out of oil markets since the initial discussions of some sort of resolution?
Hi, Lisa. Yes, Rapidan and I have been much more successful at predicting this crisis and analyzing it well before it happened than we have how prices behaved since it started, really. I think it's oversold. I think the market continues to have a strongly optimistic bias toward this crisis. President Trump has validated that with what looks like now a signed MOU. We have to see the details. But yes, I think I'm still surprised, and I think it's unwarranted. And I think a lot of this sell-off is going to retrace when those inventories keep drawing in the coming weeks and months.
The view on markets from markets, Mike Wilson of Morgan Stanley was just on, and he said what we've learned throughout this conflict is just how well supplied we actually are, that actually there's plenty of oil sloshing around. The reserves in China in particular have been incredibly robust, not to mention the others. Why don't you believe that's enough?
Well, that only explains how we skated by the last few months. What we have to wait for now is when the shortages start to appear in further inventory declines. On a seasonal basis, we are at 11-year lows in U.S. gasoline stocks, 29-year lows in distillate stocks, and our SPR is at 43-year lows. And we're going to be soon, IEA is reporting we're hitting new multi-year lows in commercial inventories. Lisa, I see this almost as an echo of 2022, when the market mispriced the Russia disruption. Back then, it was pessimistic. Crude oil prices roofed in the first half of the year, despite 2 SPR releases, because the market believed we were going to lose 3 or more million barrels a day of Russian supply. But in the second half of the year, when the data showed that didn't happen, Russian supply was not disrupted. It was reshuffled. Prices aligned. Now the market has taken a very optimistic view of the largest actual disruption. We've lost 3 or 4 times what we thought we were going to lose in 2022. So it could be that all of us barrel counters just got it wrong. But I think there's a mispricing here. And yes, we were well supplied as long as we destock and as long as China went on a crash diet and stopped importing crude oil. It's like holding your breath, though. You can do that for a while, but you can't do that on a sustainable basis. Eventually, you got to exhale, you got to eat, you got to drink. And when Asia comes back to buying, as we get in the high demand season here in the summer, I think oil prices are going to head up.
Bob, when it comes to the IEA, they put out a report saying the impact on oil demand will be much deeper this year, but they're seeing a supply glut in 2027. Do you agree with that assessment?
Yeah, our base case has assumed that Hormuz would start to reopen in July. And in the coming months, we will see Gulf producers restore production, and we will have surpluses even by the fourth quarter, possibly. But those are surpluses. I wouldn't call it a glut. We are going to be refilling stocks, commercial, strategic. China can turn on a dime and start importing again 1.2 million barrels a day. 1.5 million barrels a day. So I don't think we have a glut in the sense of massive oversupply that OPEC Plus will have to cut under necessarily. I do think we'll have surpluses if the Hormuz recovery happens.
How many barrels do you see getting out every day now?
Well, on an average basis, so on any given day, it could be 7 million barrels a day, depending on how many VLCCs are through. We estimate a little more million barrels a day on a sustained basis is getting out now, but that number is going to go up. The U.S. has been successful at getting more ships out, and we're learning about that. So there's upward skew to that forecast. We could probably be hitting 3 million barrels a day on a sustained basis, say over a week or two.
If Iran were to put oil back in the market, how much would that affect your forecast in terms of just supply increasing much beyond what you've currently priced in?
No, that's aligned. We think that we've had the view, 70% probability that in July, Hormuz would be open to freedom of navigation, more or less. And so Iran will start reloading quickly. They haven't had to shut in too much yet. And we'll start to disgorge the inventories. And then we'll see if the Gulf producers, how quickly they decide it's safe to restore their shut-in production. So Iran are coming back fits with our forecast and perfectly.
Bob McNally of Rapidan Energy, thank you so much for being with us this morning. Can you imagine, Annmarie, if that's part of what ends up happening if the U.S. and European nations start restocking their oil supplies with Iranian fuel?
That would be very much so unbelievable under a Trump administration that was obsessed with maximum pressure and making sure that Iran is under serious sanctions. I imagine all that Iranian crude, though, is going to go back to China.
Right.
Lion's share of the Iranian crude goes to China now. And Bob makes a very good point. What's going on right now is China is not buying at the rate they usually buy and import. Their thumb is on the scale. If they start buying once again, that happens this summer, you could see an elevation in prices.
Yeah, a lot to be determined as we do see oil prices stay below that $80 a barrel, with WTI trading just some $20 above where it was at the beginning of the year. Still a significant premium. Whether that premium is too high or too low, subject of real questions. Of course, it also is a question for inflation. How much is this the sole reason for the inflationary spike that we've seen in recent readings? Coming up, former Boston Fed President Eric Rosengren as Chair Kevin Warsh presides over his first rate decision. Yahira Anand also joining with SpaceX rising once again on its way to a fourth straight day of gains. This is Bloomberg Surveillance. Good morning. Yesterday was an interesting day in markets where we did see the overall indexes decline, and yet there were a number of rotations, as we were just talking about with Mike Wilson, that were really interesting, in particular with the KBW Banks Index that hit a record high. This morning, we are rotating back into some of those high flyers, the tech names, with the NASDAQ leading the charge up about 0.5% and just 0.1% gain on both the S&P and the Russell 2000. Key question will be, how much will the Fed give a reprieve to broader economically sensitive stocks? Today, we do get, of course, Fed Chair Kevin Warsh's first rate decision at the helm of the central bank. A real question here with 2s, 10s, and 30s inflecting just a little bit lower, still far above where it was before the conflict started on February 28th with Iran, the U.S., and Israel. Right now, we're looking at 10-year yields at 4.43%, not doing much at the front end, essentially flat at 4.05%. That 30-year yield still below 5%, 4.9%. a lot having to do with the oil space right now. That quiet that you're seeing, despite some of the questions around what's in the MOU, that idea that we're seeing Brent crude at $79.34, given where it has been over the past couple of months, is truly remarkable.
It is remarkable seeing Brent below $80 a barrel, given the fact that at the moment the MOU is not even signed, and the president just said it's not even final yet. So the Strait of Hormuz is essentially still shut, with Bob McNally saying 2 to 3 million barrels a day on average that is only getting out. And we are living in basically on these buffer zones when it comes to inventories. Yet the market certainly trusts in Trump in the sense that this is the direction of travel and that he wants to see the oil flowing once again. And that is why you have individuals like Citi saying we see a dovish Kevin Warsh showing up today, and they still see 3 rate cuts this year.
Markets have moved on, in large part because they've got new shiny objects to focus on, like space, like what we could see with new programming and software development coming from artificial intelligence. Lots of specific names 2 hours away from the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Well, we start there with none other than SpaceX heading for a 4th straight session of gains, with shares up 2% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, pushing it past Amazon when it comes to market value. And the gains have been so dramatic that apparently Elon Musk is already nearly a third of the way to a $2 trillion. That's according to our Bloomberg Billionaires Index, which may need to be renamed, or maybe there's a separate category for Musk. Meanwhile, we are seeing a rebound in the chip sector, with names like AMD and Intel moving higher in the pre-market after a day that saw the Philadelphia Semiconductor Index close down 5.7%. Marvell was the biggest decliner amid that pullback. Meanwhile, we are seeing Intel shares rise 3% after it announced that it is starting production on its most advanced chip yet, as reports continue to swirl about a potential future deal with Apple, and that may be a step toward that. And we end on CarMax. Those shares also, they are now falling 1.5% in the pre-market. It just reported earnings and falling despite the used car retailer reporting sales and revenue that did top expectations, though profit did come in below expectations, so the market may be reacting to that. But it is a sign that consumers are still continuing to look for value when it comes to those big ticket purchases. Lisa?
Thank you so much, Yahira. On our radar this morning, President Donald Trump denying reports that the deal with Iran includes a $300 billion investment fund. Trump adding that fighting could even continue.
It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them. We'll go right back to dropping bombs right smack in the middle of their head.
President Trump is expected to offer more details from the G7 at a 10:30 Eastern press conference. Meanwhile, SpaceX agreeing to take over software startup Cursor in a $60 billion deal announced yesterday. The move cementing key parts of Elon Musk's efforts to catch up with rivals on coding tools. The deal is expected to close in the third quarter, and kind of amazing that it was a deal so quickly after the IPO. Meanwhile, U.S. Commerce Secretary Howard Lutnick out with a warning for Anthropic, telling the Mythos maker it will need government permission to give foreign nationals access to its most advanced AI models, threatening civil and criminal penalties if the firm fails to comply. This is Anthropic. Representatives head to D.C. with Mythos 5 and Fable 5 now withdrawn due to compliance issues.
Right. In this letter from the Commerce Secretary ordering them not to give any of these models to foreign nationals, or there is going to be serious issues when it comes to going past what these export controls and licenses require. What's interesting is Dario Mode is also with the president at the G7. At the same time, I was with the president 2 weeks ago, and he was talking about potentially there's going to be some sort of maybe equity stake, public-private partnership when it comes to these AI companies. Semaphore is saying that there's a difference of opinion between Treasury Secretary and the Commerce Secretary, but mostly that the U.S. government wants to make money off these companies, essentially some sort of nationalization.
Yeah, especially to get some extra funding to fuel different programs for assistance and for transition. It's notable when you talk to corporate CEOs who have been exposed to Mythos, how alarmed they actually are about the potential to find any holes in their security, any holes in ability to get in and manipulate things. You just wonder about the timeline, whether the development of some of these AI tools is moving faster than a lot of companies' ability to really adapt and protect themselves from it.
And also to regulate it. Remember, this administration was going to have a very soft touch when it comes to AI regulation, and then all of a sudden they're actually blocking these models getting into the hands of foreign nationals. Is that going to be the direction of travel they take?
And this is going to have a huge economic implication, in part because of what it does to employment. Kevin Warsh is going to have to speak about that eventually. Whether he does today is a question as he steps into his first opportunity to shape expectations as Fed chair later this afternoon. Former Boston Fed President Eric Rosengren expecting no forward guidance from Warsh's statement, writing, "The new chair is likely to want to emphasize at this meeting a new, less transparent communication style." Eric joins us now for more. Eric, great to see you. Thank you for being with us. Can we take anything from Kevin Warsh's first appearance on the board of the FOMC back in 2006 to 2011 that we can pull forward to today as guidance over how he will really preside over this central bank?
Well, I think he's made pretty clear that he thinks that previous FOMCs have over-communicated and that it's been a bit confusing with a number of voices sometimes giving discordant opinions. So I think he's going to try to slow down the amount of speeches made by members. He's probably going to redraft the statement so that it's very factual and doesn't provide any forward guidance. And this is normally a meeting where the summary of economic projections is provided, which includes a dot plot that gives the participants expectations of where interest rates will go. It will be interesting how he handles, if they go through with that, it'll be interesting to see how he handles that, because even if there's no forward guidance in the statement, if they put the dot plot out, it's going to give some indication that many members of the FOMC think the next move ought to be up, not down.
You said if they put the dot plot out. Do you think that there's a chance that they won't?
I mean, at the first meeting, he said there's going to be a regime change. I expect this meeting is mostly going to be about communications within the committee, communications about the statement, communications with the press conference. And at a very minimum, I think he's probably going to seek to de-emphasize the summary of economic projections in the dot plot with the hope that eventually it goes away. But when you talk about regime change, sometimes it is fairly quick. So it will be interesting to see what happens at the press conference and what actually is released publicly.
Eric, you also said he's going to try to slow down the number of speeches. How does he do that while also making sure he's gaining consensus amongst his new colleagues?
I mean, I think it is a challenge, particularly given the precedent that many presidents probably have quite a lot of speeches that they've already agreed to give, as well as some of the governors. But I think he's just going to emphasize that he doesn't want to see forward guidance in any of the speeches, and that the forward guidance has often been misleading and misdirected the market. And he thinks that both in statements and in speeches, people should stick to the facts in explaining the policy that was just taken.
Well, is Warsh himself also going to speak less? And if that's the case, and Jonathan Ferro has brought up this point a lot, doesn't he just outsource how he's thinking to other members of the committee, and then they will define him?
I mean, he's indicated he thinks that the chair, as well as everybody, should speak less. We'll see how difficult that is, particularly if they're expecting to make significant changes. But I think if he does that, it's going to be in the context of the entire committee speaking less frequently and less with less forward guidance than they have in the past.
It seems like a lot of people have moved past forward guidance anyway, at least in markets. They've been looking at other metrics in terms of inflation, in terms of understanding exactly how tight the labor market is. Do you expect any guidance for at least how the Fed measures inflation, given the criticisms in the past that Fed Chair Kevin Warsh has had about the exact metric used?
The chair may talk about that in his comments. Usually those kind of discussions take several meetings. The staff usually provides briefings And there are a lot of economists that would work on the issue of what are the best measures of inflation, what's the best way to forecast future inflation. So I would be surprised if that came out at this meeting. I think that probably will take several meetings before he would introduce anything different there.
Do you think it's bad for the Fed to communicate less?
It wouldn't be my first choice.
Why?
I think that during a period of regime change, if there really is regime change, then you need to explain what you're doing and why you're doing it, particularly if it's different than what the previous 2 or 3 chairs have been doing.
Do you think that the interpretation will be some sort of overly dovish position? Do you think the implication will be sort of political, or do you think that the implication will just be more uncertainty, potentially having the opposite effect, more volatility and leading to tighter financial conditions?
I mean, Kevin has in the past talked about wanting to go back to the day where there's a little more mystique to monetary policy and not being quite as transparent in general. I think the challenge with that is both the public and investors are now very well informed about what the Fed does and how the Fed affects the economy. So I don't think we can go back to where we were under Greenspan or Paul Volcker. And I think that Kevin's thinking may evolve on this over time.
Former Boston Fed President Eric Rosengren, thank you so much for your thoughts this morning ahead of that central bank meeting and rate decision. And of course, Kevin Warsh's first time as Fed chair on the podium. A really interesting note from Torsten Slok just moments ago, coming out and saying that there are more T-bills, more dependence on the Fed, talking about how the structure of financing of the country has really put that much more control in the Fed's hand about what our interest rates are, given that 85% of gross Treasury issuance will be in T-bills, which is the most affected by the Fed's rate.
Which is why the market wants to hear from the Fed, which is why this might be challenging for Kevin Warsh if he comes in and tries to dial that down, especially given the fact that the president's appointment of Stephen Myron, who's no longer there, of course, but Stephen Myron injected this new, fresh approach where everyone was out speaking more and everyone was more transparent in how they felt. Now, is Kevin Warsh trying to put that genie back in the bottle?
Well, we will see later this afternoon if he gives a speech and if he answers some of those questions that I'm sure will be lined up in the press conference. Let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. A small passenger plane crashing near a Texas highway last night. According to the Laredo Police Department, no one on the highway was injured during the crash. It's currently unclear how many people were on board and their condition. Apple is planning to launch camera-equipped AirPods late next year as part of a flurry of new releases. Sources telling us here at Bloomberg the company plans to unveil the device around the same time as a next-generation foldable phone and a fresh iPhone model, all to mark its 20th anniversary. Ferrari is looking for ways to get people who buy its divisive EV model. Sources telling us here at Bloomberg the company is delivering a message across its collector network that purchasing a Luce is a stepping stone to other exclusive models. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. I think that John is out buying a Luce.
I highly doubt it. But actually, this is what Hermes does. You got to like buy a bunch of stuff to then get on the list to try to get a Kelly or a Birkin. And that's what Ferrari seems to be doing. It makes me think, do people actually want this car? Or they want a classic, amazing, incredible Ferrari, and they have no choice but to buy this Luce first to get on those lists.
If you want the privilege of buying a $2 million Ferrari, you first have to buy just a mere $650,000 car. Up next, Kevin Warsh stepping up to the plate.
Kevin Warsh knows what he's doing. If he wants any changes, basically he needs to have the other 11 members on the FOMC, the voting members, on board.
Warsh will do is say there's tremendous uncertainty. It would actually be good for the Fed to have that flexibility here.
Holly Liss of BTG Pactual joins us next to talk about exactly what to expect later today. This is Bloomberg Surveillance. little bit of a lift. This seems like a waiting pattern ahead of a couple of key events this morning, whether it's the Fed meeting later today, Kevin Warsh's first time at the podium, giving a press conference following the rate decision as Federal Reserve Chairman. Of course, we also have the MOU on Friday, the potential for some sort of deal between the U.S. and Iran getting inked. Put this all together, markets are flat. They don't know where to go with this. S&P futures essentially unchanged. You've got the euro dollar essentially unchanged at 116. You've got 10-year yields unchanged. You've got crude inching maybe a little bit higher, but still incredibly low compared to where they've been over the past 3 months, $76.70 after rising beyond $100 a barrel in just the past couple months, given the fact that there has been a war going on in the Middle East that has stalled out most imports and exports of oil through the Strait of Hormuz. Under surveillance this morning, someone's going to have to put this all together. Kevin Warsh stepping up to the plate.
Kevin Warsh knows what he's doing. If he wants any changes, basically he needs to have the other 11 members on the FOMC, the voting members, on board. Too high inflation, strong labor market. That argues, of course, for the Fed needs to move towards a more hawkish stance.
Warsh will do is say there's tremendous uncertainty. It would actually be good for the Fed to have that flexibility here.
Here's the latest. Investors looking for new messaging from Fed Chair Kevin Warsh today. Markets expecting policymakers to hold rates steady as inflation picks up. Holly Liss of BTG Pactual writing, there is always room for a surprise, and more so given the new Fed chair and rapid decline in crude. Holly joins us now for more. Holly, good to see you. Want to start with a question of what the bigger risk to markets is. A potential dovish tone from Kevin Warsh or a potential hawkish tone from Kevin Warsh?
Well, at BTG, we feel that the risk is more towards the hawkish side. Nobody's really looking for any change to the overnight target rate. There is a lot of speculation that they're going to tweak the statement, that the dot plot will modestly change, and that the economic projections will also be tweaked a bit. The risk is that they come out more hawkish if they eliminate that additional statement where they bias towards easing. So if they take that out, that is more on the hawkish side. However, if you start seeing Chairman Warsh eliminate his dot or even the dot plot entirely, that would clearly be viewed as more hawkish. So I think that's where the risk is. Now, let me take the other side of the coin. Of course, with the crude oil prices coming down recently, that has to fit into the scenarios they're going to be talking about, as well as inflation, and that could trigger more of a dovish statement. So it does wait and see. We'll have to see how it goes from there, but I think right now people are leaning more towards the hawkish side.
Holly, you said if they didn't put out a dot plot or if he withdrew his particular dot, that would be viewed by the markets as hawkish, potentially leading to tighter financial conditions. Can you explain how less communication is viewed as potentially hawkish at a time where there is a suspicion that Fed Chair Kevin Warsh is going to automatically lean to the dovish, given some of his commentary leading up to his confirmation?
Well, I think there are still some who recall when he was here in the chair, not in the chair position, but with the Federal Reserve in 2006 to 11, he was leaning more towards the hawkish side. So there are still some remnants of that people are looking at. Plus, the Fed has become so transparent with the dot plot, with the SEP, with all of the conversations and meetings that they give, that the transparency is viewed as more open and we will know what they are doing. If they start curtailing that, especially if Chair Warsh wants to pull back on that communication, they may be thinking something else is going on and that he is not leaning towards the easing side, and therefore it could be hawkish. Now, that said, with crude oil prices dropping, clearly there could be room for some flexibility towards the easing side.
Yeah, Holly, that's what I wanted to pick up on. This drop in crude we've seen, how much really is this a gift to Kevin Warsh as he meets members of the press and starts talking about the outlook for inflation?
I think many of us will take gifts where we can. So it certainly gives them some breathing room, and not just Warsh, but really the entire committee, those that have been a little bit more concerned about inflation. Now, just because crude is down and BTG's technical models, our model says that crude could continue to fall. We have an outlook for potential to $72 to $69 a barrel. So that would be another 7 to 10% from where they settled yesterday. So that does give them some breathing room. It is a gift for him. we will need to see that filter through into other prices, inflation expectations, and the inflation numbers. Now, if we're going to speak about inflation numbers, he has a favored number, the trimmed mean inflation number, which is lower than the other numbers and statistics that the market tends to look at, CPI, PPI, PCE. So he could clearly be leaning towards that number and the crude coming down and being a little bit less inflationary and filtering through to the easing side.
Is there any chance they don't remove the easing bias?
So as we talked about at the start of this, there's always room for a surprise. While everybody, I shouldn't say everybody, there's always risk. While most people are looking for the statement to be modestly changed, there's always the chance that it could be drastically different. This is his first meeting. He may want to establish his credentials and his footprint on the meeting and on the committee. And let's not forget, you also have former Fed Chair Powell in the meeting as a governor. It has been a long time since that happened. Not that it can't happen, but it has. And so Chair Warsh may want to establish his own sort of outlook and regime change and things like that, given that a former Fed chair is in there also as a voting member.
Holly Liss of BTG Pactual, thank you so much for being with us this morning. Can you imagine the lunchroom at the Federal Reserve, the FOMC, given the connection or lack thereof between Kevin Warsh and Jerome Powell? Will they sit next to each other? Will they sit far away from each other? Will Jerome Powell be wearing a hat and sunglasses to keep a low profile?
Yeah, he said he's going to keep a low profile. Then he went out, made a major speech, and didn't keep a low profile. I think a lot of people are wondering, actually, when he is going to leave the board. I guess maybe potentially when this Lisa Cook issue is wrapped up with the Supreme Court. But you have to think it's a bit of an awkward dynamic for Kevin Warsh to come in, given this is his second round at the Fed. Last time he was a hawk, and based off his interviews and his hearing in Congress when he was auditioning to become the Fed chair, he obviously had a change of heart.
There is a lot of institutional support for Kevin Warsh. He is a known entity. He has been in the field for a while. He was respected. He was endorsed by a lot of people who have been both in the Fed and outside of the Fed. Question a lot of people have is typically whenever there is a new chair, there are accidents that happen. There are communication errors, whether it's we're not here to close the spreads over at the ECB or whether it's just potentially signaling a little bit of the wrong direction. Is that the potential risk of just sort of a communication error amid this change to potentially reshape the way that the FOMC communicates?
And does the market, but specifically the bond market, actually push back and test him? You know, does he have a moment where I'm not here to put a dot on the plot, potentially? And then I think you and Jonathan have talked about this a lot. What happens then if you outsource your views to other members of the committee? How hard is it going to really be for him to go around and say, sorry, you can't give those speeches?
Well, will there be an answer and question period of time after the press conference? Stay tuned. Coming up, we're not going to answer that question, but we will talk about what to expect. Sarah Malek of Nuveen, Dom Rizzo of T. Rowe Price with tech stocks soaring, Jonathan Pingle of UBS, and Blake Gwinn of RBC Capital Markets on a day of a bit more optimism than yesterday. Look at that, the sun coming out. This is Bloomberg.
Warsh will say there's tremendous uncertainty.
I expect his tone will be a little bit more dovish.
Too high inflation, strong labor market. That argues, of course, for the Fed needs to move towards a more hawkish stance.
The Fed's primary job is controlling inflation.
It's a long shot to call for a rate cut this year.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Stocks rising ahead of Chair Kevin Warsh's first rate decision at the top of the central bank. All eyes on how much he seeks to reshape the institution. Traders also focusing on the U.S. consumer retail sales coming out in about 30 minutes' time. And SpaceX just keeps on rallying, boosting its valuation beyond Amazon, maybe to the stars. The question is, how does Chair Warsh reconcile that market enthusiasm with labor market concerns, given some potential wobbles that we've seen under the hood with the consumer?
Well, potentially under the hood with the consumer. How many times have people come on this program and said, oh, the consumer's relying right now on the bigger than expected tax refunds? We heard that in December on Christmas, people saying they're spending what they prepared to get. And it was higher electricity bills in January. And then, of course, the past few months, it's been higher oil prices, higher gasoline prices. But today, you look across the continental United States, $4 a gallon. When it comes to energy, prices are moving in the right direction at a time for him to come out and start his Kevin Warsh era.
That said, this is why retail sales will be interesting, and we do get that at 8:30 a.m. Eastern time in just about 29 minutes. A lot of people have been looking at credit card data. Citigroup put this out yesterday, saying that the card data increased in the month of May, led not necessarily even by gasoline purchases or related things, but automotive retail, yes, so that might be a little more related, and home furnishing. They talk about how overall they expect a 0.9% month-over-month increase, which is beyond the 0.6 expected by the median. You put this out and you start wondering how broad-based is the inflation, given what we're seeing in markets, given what we're seeing with the employment market, and given how we're measuring things. Again, another key question for Kevin Warsh.
It's a good question to note, too, how we're measuring things, because surveys and polls, you continuously see a very frustrated consumer, especially on the lower end of the income spectrum. But we heard from David Tinsley just 2 days ago, and what did he say in his report? Sunny days, consumer spending remained remarkably resilient in May, strongest growth in nearly 4 years. So consumers might be frustrated, and they are saying this in surveys and polls, and they are a little bit cranky with higher prices, but they're still going out and they're still spending.
They're not cranky if they bought into the SpaceX IPO, or potentially if they're trading some of the derivatives that have come to the fore, options starting to trade yesterday. We're going to parse through all of that right now. A pretty muted market. You are seeing a little bit of a lift in equities led by the tech trade, which led the way down yesterday, essentially flat on the S&P. Eurodollar essentially staying around that 116 mark. Yields had started the session a little lower, now marginally creeping higher, 4.44% on the 10-year crude, essentially staying in that $76 range, although inflecting a little higher with the MOU in question, given some of the pushback that we heard from the president this morning. Again, will it last? Will this be something sustainable, or has the market just completely moved on because oil has gotten through and ultimately they are not going to get thrown around by headlines?
Well, Mike Wilson said the oil has completely moved forward, and this is in the rearview mirror. The issue, of course, is going to be that we could see fits and starts when it comes to dealing with Iran. We already saw that during the most problematic and height of the kinetic war with Iran. Right now, what you can potentially see, more oil getting out, but the president said himself he doesn't like what he's seeing in terms of the regime. He will start strikes again. And if you read the Memorandum of Understanding, the draft text we have, it talks about nuclear discussions in the future. But the other two red lines the President of the United States, Trump, has had for years is money to proxies and their ballistic missile program. And this MOU doesn't address either.
Well, coming up, we'll talk about how this bleeds through the market. Sarah Malek of Nuveen with stocks navigating that wave of volatility, particularly when it comes to semiconductors. Dom Rizzo of T. Rowe Price as SpaceX overtakes Amazon as the world's fifth largest company. And Jonathan Pingle of UBS looking ahead to Fed Chair Kevin Warsh's first rate decision. We begin this hour with stocks steady as investors count down to the Federal Reserve. Sarah Malek of Nuveen writing, expect the market to broaden and buy the dip behavior to continue. Sarah joins us now for more. Sarah, good morning. Welcome. I want to start with how much the market is really trained to the Fed, how much the market's really trained to oil, or whether this is all about deals, all about AI, and all about some of the enthusiasm for new technology.
That's an interesting question. The answer is all of the above. But really what grabbed the headlines this week was the Middle East ceasefire. And what that cleared the way for was for the market to broaden. We see the market broadening for two reasons. First of all, inflation should moderate as oil prices decline and tariff refunds occur. And secondarily, the economy is very strong. We've seen strong manufacturing data, a continuing strong labor market, and the consumer continues to spend. We should see a decent retail sales number later today. So we prefer at this point global equities, European equities, and cyclicals over growth stocks. And we think that people will continue to buy the dip, as we saw after yesterday. When we see these little pauses in this rally, we tend to see people stepping in, buying the dip on the market, and we think it'll be a broader rally from here going forward.
This is an interesting point and something that Mike Wilson was making earlier, that this is unleashing the broadening trade that we saw earlier this year, the equal weight, the international trade. Is that also coming with potentially a fading in the tech sector, or is it a yes and type of story?
We came into this year bullish on technology stocks, and I always say don't bet against the U.S. or technology stocks. But I think there will be some give. We've seen this huge rally in semiconductors, just even double digits in the last number of days. That's not going to continue. Some of that is going to be a source of funds for buying the rest of the market. But I don't think that means that tech is going to be completely left behind. It'll just be a broader rally going forward, driven by this continued strong economy and also by inflation that is now moderating, but it's not going to go back to what the Fed has stated was their target, which is 2%, because before the war, inflation was still running in about a 2 to 3% range.
Given the fact that you said that really it is the end of the war in the Middle East that triggered this initial broadening out that we've seen over the past couple of weeks, how much do you expect this to ultimately be the arbiter of how far it can go, how low oil prices can go, how dovish the Fed becomes?
Earnings growth tend to move the market higher. And if you remove the war from the equation, and the market has generally moved on from the war and assumed that it will end in a reasonable period of time, earnings growth for 2026 should be over 20% when all is said and done. We saw better than that for the first quarter. Earnings growth can drive this market higher without necessary multiple expansion. Multiples can actually decline a bit while earnings continue to grow. And that's why we're bullish on the market and think it has upsides from here because of that earnings growth number north of 20%.
Building on Lisa's point, if the market's no longer worried about the war in Iran, what's the greatest risk right now?
I think today's risk is going to be the Fed meeting. Warsh is going to be walking a fine line between being overly dovish and overly hawkish. He needs to make sure that what he communicates is something that the bond market believes in. He's balancing the dual risks between inflation, which is very strong, and the economy that is strong. So we forecast no rate cuts for the rest of this year. Next year, though, if the economy does weaken a bit, you may be able to squeak one rate cut by. But hikes are also on the table in 2027 because it depends on the strength of the economy. And inflation, as I said before, was not near the Fed's target before the war started. So even though we're going to finally move past the bump in inflation due to the war, we still have to deal with the chronic ingrained inflation in the economy. I'll also mention payrolls. They've been so strong recently. I'm worried about wage inflation picking up again because supply of jobs has been increasing. Payrolls have been strong, and wage inflation may start to pick up because of that.
Well, that's why a lot of people are also concerned about potentially the Fed having to hike, and the market is still seeing a hike, even though they retrace some of those moves because of what we saw with the president's MOU in regards to Iran. But you're thinking potentially it's going to be a cut in 2027. Does it feel odd to be at odds with where the market's pricing?
The market, it could be overly hawkish at this point. I agree with no cuts in 2026, given the strength of the economy and the issues around inflation. 2027 is still a long way away. By that point, inflation could be moderating closer to target. It was trending in the right direction before the war started, and the economy and earnings may not be as strong in 2027 as we're seeing this year. I wouldn't take rate cuts off the table for 2027. I think it's overly hawkish to assume we're going to be walking into hikes next year.
Sarah, just going forward, would anything make you rethink the rotation trade that currently is underway?
Well, first of all, I mentioned follow earnings growth. Tech is still going to be the leader with earnings growth. I just think tech has moved a little bit too far, too fast in terms of its performance, but earnings are still there for tech stocks. Second is if we go more to a defensive environment. The geopolitical issues in the Middle East caused investors to feel a little bit more defensive under the surface. That's when tech tends to outperform. Now that that is moving out of the way and we can focus on the broad economic drivers such as manufacturing data, which has had a really nice pickup and continued spending by the high-end consumer, that should be better for a snapback in financials, in consumers, and some of these industrial companies that were hurt by the squeeze of inflation and higher tariffs.
Sarah Malik of Nuveen, thank you so much for being with us this morning. As we do await a Fed rate decision, we're also awaiting those retail sales, and that's going to be really important about 20 minutes time as we get a sense of just how much resilience there is in consumer spending. As we did hear from David Tinsley, there has been quite a bit. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg brief with Vani Quinn. Vani.
Lisa, thank you. SpaceX overtaking Amazon in value to become the 5th largest stock in the world. Shares closed nearly 4% higher, pushing its market cap to $2.65 trillion. And the stock's intraday high, SpaceX topped Microsoft to briefly become the world's 4th largest stock. In sports, it was a day of superstar action at the World Cup. Kylian Mbappe scoring 2 goals to power France over Senegal. Erling Haaland also scoring twice for Norway against Iraq. And Lionel Messi stealing the show with a hat-trick for Argentina in their win over Algeria. The DOJ charging 5 people in connection with an alleged plot to use explosives and snipers to target attendees at Sunday's UFC event outside the White House. The alleged plot is just the latest example in a series of attempted attacks against President Donald Trump and other prominent individuals. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, the morning calls, plus Don Rizzo of T. Rowe Price on what's next for SpaceX after it overtakes Amazon in value. Just what are the revenues of these companies? How does that compare to the market capitalization? That's coming up next. This is Bloomberg Surveillance.
The options market's been setting records actually for 6 straight years. I think everybody knew SpaceX was going to be big. That first day activity, we saw 1.77 million contracts trade. We've actually seen a trend this year. About a third of the listed stocks out there kind of have this upside skew. But it really does tell you what investors are thinking.
And they are thinking they want to be bullish. That was Henry Schwartz of CBOE. And when you take a look at what they're thinking this morning, at least when it comes to the tech trade, you can see the optimism bleeding into equities, up about 0.5% on the NASDAQ, taking back some of the losses, down more than 1% yesterday, led by the semiconductor stocks. A brutal day for them. This morning, more broadly, about a 0.1% gain on S&P and Russell 2000 futures, ahead of what could be a really interesting day. On one hand, you got SpaceX and the ongoing rally there. On the other hand, you have what could percolate out of the Federal Reserve, with Kevin Warsh unveiling his view as Fed chair for the first time. Time now for the morning calls. First up, Bernstein raising its price target in Intel to $100, saying the company should benefit from stronger server demand. Those shares up more than 3% in pre-market trading. Next up, Wells Fargo trimming its price target in FedEx to $425, saying next week's earnings results will be more important than the guidance. The shares essentially flat. And finally, Citi hiking its price target on Micron to $1,200 from $840. The analyst increasing the company's fiscal 2026 and 2027 estimates to reflect better than expected memory prices this year. Those shares almost up 3% after being absolutely hammered yesterday. The whipsawing continues in the semi space, not so much when it comes to SpaceX. SpaceX on track for a 4th straight day of gains. The company overtaking Amazon to become the 5th most valuable in the world. Ed Ludlow of Bloomberg Tech writing, the IPO wasn't just a bet that investors would buy the stock. It was a bet that existing shareholders would sell it. Ed joins us now for more. Ed, this is such a great point because we've all been wondering, what are all the newly minted billionaires going to do with their money? And it turns out, keep it there, keep it in SpaceX. Why hasn't there been more cashing out?
Well, in the first instance, like the lockup is complicated. It's staggered. You know, there is some liquidity or some freedom in the shares in August, but a very small portion of them. And so, like, we've been focused on this idea that, you know, taking into account today's pre-market gain, the stock's up 50% from its IPO price. It's probably just better to talk in terms of market capitalization. You know, it's a $2.7 trillion company ahead of the opening trade today, and there's just scarcity because only 4% of that market cap shares are available to trade right now. The retail allocation of 20 to 30% is probably a big factor here. But the reality is, like, in an environment where options have just launched, there is price discovery. There was still a clamoring to get hold of shares outside of the IPO allocation, and it's just not trading, shall we say, on fundamentals. What it is trading on is a bit of a mystery, Lisa. I think you've got great guests throughout the morning to ask about that. But, like, the scarcity element's really important here. Read the details of the lockup is the point I'm making.
Yeah, this is a great point. The idea that maybe there's not selling pressure because a lot of the holders can't sell at this point. Ed, from your vantage point, do most people in the tech space seem to think that the valuation's gotten a bit excessive?
Yes. I mean, I put a post out on X yesterday about its price to sales being above 150 compared to Amazon, right, which is low single digits. And people said, well, why are you bothering with that? Why don't you do price to earnings? And I was like, well, what's the point? What earnings? You know, there isn't a metric in these early days that gives you a fair valuation. The thing I write about in the Tech in Depth column is, like, even when the lockup period is done, all those venture firms that have realized tens of billions of dollars of gains on their initial investment will redistribute the shares to LPs. They don't give them cash. They just say, I sign ownership of these shares to you. And the question at that point is whether those endowment funds and pension funds, like the venture capitalists, believe that actually 3 trillion is quite modest. And they see a time horizon that's near term to it being a $5 trillion company. You know, there are lots of bullish people out there that really believe that's the case. And you will have seen that Elon Musk tweeted or posted on X this week that he sees some pretty out of this world financials from this company by 2030. And it's whether you believe that or not, and you hold the stock as a result.
Ed Ludlow of Bloomberg, thank you so much, as always. We look forward to hearing more on your show later this morning. Don Rizzo of T. Rowe Price writing, at this valuation, it all comes down to the long-term AI positioning. Owning and harnessing the model is key, and now they have strength in both. Dom joins us now for more. Dom, what do you make of the question that we were just talking about with Ed, which is, do you feel like this market has just gone way too far, in part on technicals that favor it for now?
Well, first off, thanks for having me, guys. It's great to be here. And, you know, Ed always does such great work. So, look, if I take a step back on SpaceX, you really have to think about it as 3 separate businesses, right? There's launch, where they have a near monopoly in sending stuff up into space. There's connectivity, where I think they have a really good positioning in terms of offering Wi-Fi, not just in the US, but worldwide. And then there's AI, right? And you know, the debate before is what's happening with the fundamentals at SpaceX. And I would argue that all of the stocks trading is basing on pricing in the terminal value of the AI business. And what is that going to look like in 2030? And, you know, what I referenced before is really around the Cursor merger, right? So Cursor has a wonderful harness, one of the best in the world at coding. And now with the merger with SpaceX, they have a leading edge model in the form of Grok. And I think what we've learned time and time again is that in AI software and AI native software, owning the model plus the harness results in differentiated, wonderful user experiences. The other thing that you have to think about on the AI business is they've been renting these GPUs, $50 billion a gigawatt. So look, the stock is up 50%. Of course, in those situations, we always consider risk management. We consider portfolio construction. You have to think about position sizing. But I think what's happening with the stock is looking into 2030 fundamentals and what is that going to look like for AI specifically.
Well, 2030 fundamentals, Elon Musk says that he's going to have $1 trillion in revenue. Morgan Stanley puts it at more like $470 billion. Where do you see revenue lining up in 2030?
Yeah. Well, obviously, I'm not going to get into our internal estimates, but if we think about how you get to hundreds of billions of dollars of revenue, it comes to what can they monetize per gigawatt, right? And so what was so interesting about the Google and the Anthropic rental deals is that they were monetizing at roughly $50 billion a gigawatt, which is 2 to 3 times the average rate in the spot market today. So how much of that premium was just the fact that we're incredibly short compute? How much of it that it was Airbnb-like rental deals and that it's short-term, not long-term? And how much of it is that SpaceX is truly differentiated at standing up 100,000 plus GPU coherent clusters? I mean, I think that's the question to be seen. So how do you get to hundreds of billions? You maintain, or that number comes down a bit, 50 billion a gigawatt, maybe coming down a bit over time. And then you get to a path to 10 plus gigawatts, right? That's how you get to those type of numbers. But it's a far way out. We have extraordinary competition in the form of OpenAI and Anthropic. And I think Ed did a really great job in his piece of laying out all the different technical factors on the stock.
Well, some analysts will say that Cursor doesn't have the scale of OpenAI and Anthropic. How quickly can it get to that level?
Yeah, first off, you know that we've been investors in both OpenAI and Anthropic. And the thing that I've been so stunned by is just how quickly these businesses can grow once they catch virality inside the enterprise. And so I'll give you an example. When I did the Anthropic round in the summer in the global technology strategy, Anthropic was just doing $5 billion of run rate revenue. They're now doing 47 billion plus. I mean, I've never seen numbers like this. And why is that? Is because AI is this incredible productivity enhancing tool. You know, OpenAI and Anthropic, widely expected, you know, if you look at what people are thinking, combined a couple $100 billion of run rate revenue by the end of the year. Combined, their valuations are in the $2 trillion range. You know, I've never seen growth like this in AI. And the question is, can Cursor plus X as model plus harness really carve out a place in the enterprise? And let's see, you know, we don't know yet.
Tom, what would you see that would make you bearish?
Well, a couple different things I think about. So number one, I think about N-1 models a lot, right? Open source models outside of China, or even the open source models from NVIDIA. And do open source models come in and lower the price of a leading edge token? I think what I see today in what the tokens are going to kind of distribute like within the enterprise and personally is there's going to be a bifurcation, almost like the smartphone market. You know, the vast majority of smartphones today are, you know, Android phones, sub $400 in value. But all the value in smartphones is in the $800 plus smartphone market. I think that's almost what it's going to look like in tokens. All the value of tokens are going to accrue to the leading edge. And who's at the leading edge for models today? Only 4 companies: OpenAI, Anthropic, Google, and X. That's it. So I think the value will accrue to those leading edge models, and it's imperative to have a model plus a harness in order to have a differentiated product.
Dom Rizzo of T. Rowe Price, thanks for your insights. As we look to a 4th day of gains on SpaceX after their IPO, we're also looking for some retail sales that should come out. A read on the U.S. consumer in just over 5 minutes time. A question here about how much this starts to percolate out into consumer price inflation, but also whether it's really 2 different stories that aren't really converging in any way.
Yeah, and I'm really more looking forward to seeing the retail prices and the data after this MOU is signed, and potentially in the middle of the summer, if oil prices continue to decline, are consumers then taking that money they were spending on much higher gasoline prices and putting it elsewhere?
Yeah, are you going to start to see people traveling more, although they have been traveling? I mean, that's a question.
They've been resilient.
Where have they pulled back, right? I mean, ultimately...
They've just been choiceful.
They've pulled back on their loose purchases. It seems like that's...
Luce.
That's like what ultimately we can see with Ferrari looking to some of their most reliant customers, potentially. That is clearly who we're talking about with these retail sales.
That's a different layer of inflation. You know, Knicks tickets, Luce buying. That's just a different...
Birkin bags. Yeah, exactly. This is not exactly out of my price range. Coming up, Jonathan Pingle of UBS on why the Fed could stay on hold until 2028, despite some calls and, frankly, market pricing calling for about an 80% chance of a rate hike by the end of this year. This is Bloomberg Surveillance. Good morning. Seeing a little bit of a lift ahead of the Fed rate decision and ahead of data that we're about to get about 20 seconds away. Retail sales in the United States, a lift right now across the equity space, although really seeing it with the NASDAQ in particular up 0.5%. When you take a look at bonds, you did see a bid into bonds earlier, kind of wobbling at the front end when you see just up about a basis point, 4.07%. And then in the crude space, you could see a bit of a fading in the expectations around the MOU, given some of the rhetoric that we've heard. Right now, we do have retail sales crossing. Michael McKee has the numbers. Mike, what do you see?
Well, shop we must. That seems to be the motto for Americans. Also, throw in inflation, and you get a retail sales headline number up 0.9% after 0.5 last month, and the expectation was for only 0.6. Now, take out autos, and it's 0.8. Take out autos and gas, and it's 0.5. Which is still better than forecast and is still a relatively strong number. The retail sales control group, particularly strong this time. That's what goes into GDP for retail sales, up 0.7% after a 0.5% gain in the month of April. The forecast was for a 0.4 gain. So it is altogether a relatively good number in terms of Americans keeping up with the economy at this point. Now, the question is, and we can't immediately do this, but the question is, how much of that do you deflate for inflation? We know it's hit gasoline prices. What we don't know at this point is how much of it's made into other prices at this point.
And that's going to be a key question for the Fed later this afternoon. We'll get to that in just one second. When you take a look at the market reaction at the front end of the yield curve, it had been selling off. You had seen yields rising. They rise a little bit further in response to this, given the fact that this does just sort of lean into the idea that there is resilience, that consumers are strong. When you take a look at equities, at least in the space, in the tech space, you are seeing them hold on to gains, also just barely hanging on to gains on S&P futures up about 0.1%. Mike, how does the Fed deal with a resilient consumer at the same time that, yes, they're getting a reprieve from lower energy prices, but that isn't the whole story for inflation?
Well, it's definitely going to be one of the top questions that Kevin Warsh gets today in his first, and we hope, first of many news conferences. But Warsh has got kind of a tough job, and so does the Fed at this point, because they do have a stronger economy than they anticipated. At the same time, they've got more inflation than they anticipated. No change in rates expected today, other than we'll probably see them drop the easing bias that they had. Then the question becomes, what's in the dot plot? Do they take out all the cuts? There was one cut forecast for 2026. Do they take those out? And how do they adjust the forecast now that we're seeing stronger than expected growth? And, of course, for Warsh himself, we don't know if he's going to put in a dot at all. He said he doesn't like them, and he said he doesn't want to. And as I mentioned, is this going to be the first or the last of his news conferences? He doesn't want to do as many as have been done. Communications under review, that's probably something he'll talk about today, because it's one of the things he can do relatively quickly, is at least bring that up as an issue for the board to decide. And, of course, everybody's going to want to know, if you have a strong economy like this and inflation up, how do you deal with the Trump elephant in the room, the question about whether you were just appointed to cut interest rates and now you really can't?
Michael McKee, we'll be looking out for you throughout the day and, of course, in that press conference. Looking forward to your question as well. Jonathan Pingle of UBS joins now, and I want to get your immediate reaction, Jonathan, to what we just saw. We got retail sales coming in stronger than expected. The control group rising to the highest pace going back to the end of March. At what point is this a signal that inflation maybe is broader based because there is this really strong U.S. consumer?
So when I actually look at these numbers, I don't look at this pace of consumer spending as being all that inflationary. And I mean, I'd like just to put some numbers on it. You know, when we got the relatively strong April data, after services were added, and this is to Mike McKee's point, it was deflated, annualized, it was only 1.3% real spending growth. We actually are tracking and thought we'd get 2.1 in the second quarter. So we were hoping we would get some decent numbers in May and June, and we wouldn't have that sort of more sluggish pace. But we also have to remember, this is like peak fiscal stimulus, right? All those refund checks have gone out. We've had the withholding adjustments. I mean, yes, this is great news. Could be a sign that we are seeing a real pickup in consumer spending. But at the same time, we do have this tension where there's been a lot of cash sent back to households. And if this is it, and we're only going to run sort of a little over 2% annualized, that's not really super strong for the U.S. So I think for this one retail sales report, I think it's actually good news that it wasn't slower. But, we were sort of expecting a little above consensus control, and we got that. But I don't think this is yet a sign the economy is really overheating. I think combined with the MOU, whatever that is, I think that's actually probably good news for the FOMC today.
You expect that there are no cuts appropriate until 2028, and that probably this is a Fed that is on hold until then. What would you hear potentially today that would surprise you? Are you thinking that maybe there is a bias in the markets that this is going to be a dovish Fed chair, Kevin Warsh, or that this, frankly, is going to be one that harkens back to his 2010 days and is a bit more hawkish?
So I'm prepared to be surprised. When at 2 o'clock, I wouldn't underestimate the hawkish shift from the committee. Getting rid of rate cuts. We'll see some hikes appropriate. People thinking pipes are appropriate this year. I do think they're going to probably nudge down growth a little up to the unemployment rate in the out years, but certainly more restrictive policy is going to be the message from the statement and the SEP. Pretty sure. But for Kevin Warsh, there's been a lot of iterations of him in his career. I mean, I was on the board staff when he was a governor. Remember him quite vividly. I mean, I don't want to oversell that, but he's gone from a period of time being hawkish, more dovish lately. I don't actually know we know who we're going to get. and then combine that with he wants to talk less, communicate less, and provide less guidance, we could be setting up for a really disappointing lack of clarity after markets getting used to 20 years of Powell, Yellen, Bernanke.
How does the market react to that level of potential not having a lot of clarity on who Kevin Warsh is?
Oh, I mean, I think it does raise the risk of, forward pricing not aligning as closely with where the committee is than we're used to. And also, if he's going to talk less, everyone else is going to talk just as much as they were before, certainly the regional Fed president. So he does risk, ceding the communications to others. But I also think that, if he's not going to be, as transparent and clear as his predecessors, there is just going to be more room for confusion, right? Whether it's, people interpreting a comment as a green light to price in more hikes or price out the hikes. We'll really have to see, but it sets us up for something really unusual because we also haven't really heard him in the public eye as much as his predecessors when they assumed the chairmanship.
Michael McKee has some more details from the retail sales report. I want to bring you back in, Mike. It is notable because there was this huge pop in gasoline sales, right? The sort of sales at the pump were up some 3.6%. What are you seeing more broadly?
Well, I think the gasoline thing is a sort of a kind of number, and nobody's going to be surprised by that. But what is interesting is that there are a couple of areas that did not see any gains, including food. And we know food prices were up, so inflation should have added to that. But food and grocery stores both flat on the month. The clothing and accessory stores up 0.3, which is a reverse of what we saw the prior month. And it doesn't, this is May, so it doesn't include Annmarie and her 6 million best friends buying Knicks gear the last 2 weeks. We'll see that next time. But non-store retailers were a little stronger, 1.5% up. Food and drinking places, the only kind of discretionary spending, services spending that's in this report, were down by 0.1% after rising 0.9 last month. So people stayed home and maybe bought stuff on the internet. They didn't buy stuff for their houses, but they may have bought a little more gasoline than they anticipated having to pay for.
Michael McKee, thank you so much for that. And Annmarie, I believe, wants to clarify that she's the OG. And actually,
I've had this mug. This is not new.
You're not buying gear because you've already had all of the gear.
I might buy something special with the finals.
You going to the parade?
Championship. Haven't decided yet, but I was at Game 5.
Cool.
Just want to rub it in.
The other way, people are looking at the World Cup type of bump and whether that ultimately is also going to boost retail sales. I'm trying to bring it back to the retail sales. Jonathan,
well, in June, in 1994, you did get a little bit of bump in June, July.
Yeah, so there you go, and potentially even more so, although I don't know if anyone has any money left over to spend, given how expensive some of these tickets are. From your perspective, are you expecting any commentary either on the balance sheet, any commentary on Fed communication when it comes to constricting other governors and how much they're going to be speaking?
I don't know how much he's going to be able to restrict the other governors. I mean, given their independent oversight boards, and many of those boards, they would like their regional Fed presidents out. It draws attention to their cities, their local economies. They have sort of every incentive to get the regional Fed presidents out and on Bloomberg. When I think about what he's going to do, I think one of the initial tests really will be the statement itself, right? Like, the statement has had a certain amount of repetitiveness for a while, some phrases that really are just so pat they have no meaning. That if there's a significant overhaul of the statement, I would say that not only does that signal he is going to try to make changes, but he managed to get the consensus to do it at the meeting, which shows a certain amount of ability to drive consensus. Other than that, many of these changes I think are going to take longer. So I would expect him to talk about, subcommittees going out and looking at their communication strategy, the balance sheet, et cetera. But at the very first meeting, I don't know how much fundamental change there's going to be.
Yeah, a lot of people saying he's probably not going to rock the boat, although we'll see. If he drops the dot, wow, all bets are off. Jonathan Pingle of UBS, thank you so much. If you are just joining the program, we did get retail sales in the United States for the month of May. Came in significantly above expectations, 0.9% for the headline versus the 0.6% expected. When you strip out autos and gas, you could see 0.5% gain versus the 0.3% that was expected by economists. And that retail sales control group, 0.3%, 0.7% gain. And you can see that that is the most going back to the end of March. So that resilience still under the hood. And that, I think, is the reason why some people are saying, is it just the gasoline story, or is there just a lot of cash, whether it's peak stimulus checks coming back in, or whether it's just that people are feeling pretty good from their stock purchases?
It's clearly also outside of what's going on in energy, because outside of those receipts at gas stations, which accounted for 3.4%, you're up 0.7%. So sales are happening and there is a lot of resilience. But you think about what Jonathan just said there. It's in terms of individuals and households are having more money to spend right now. But is that it for the rest of the year? That fiscal impulse, is this all we're going to be living on for the rest of the year? And that's what it looks like.
Yeah, well, right now people are looking to potential wage growth that we could get to offset what some people have been taking from their savings. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Recapping the data we just got then, retail sales coming in higher than expected in the month of May, jumping 0.9%. It's a sign U.S. consumers are remaining resilient despite the highest average gas prices in almost 4 years. In Georgia, Republican Congressman Mike Collins defeating Derek Dooley in a runoff election for the Senate nomination. The Trump-backed candidate will now face incumbent Democrat Jon Ossoff in November. It's one of a handful of races that will determine Senate control. AI taking center stage today at the G7 summit, with top executives meeting to discuss policy and potential risks. OpenAI CEO Sam Altman and Anthropic CEO Dario Amodei among those joining President Donald Trump as he wraps up talks with world leaders. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, setting you up for the day ahead. Plus, Blake Gwinn of RBC Capital Markets as the bond market enters uncertain territory. From New York, this is Bloomberg Surveillance. Good morning.
The question, which you may or may not answer today, is what are you going to do going forward? Are you going to be active using the balance sheet and helping funding markets stabilize? Right now, they don't need to because bond volatility is totally under control. Funding markets are totally good. We kind of need the markets to pressure them to provide more liquidity. And the reason why we need more liquidity is because the economy is booming.
That was Mike Wilson of Morgan Stanley looking for some sort of potential pullback that could prompt a Federal Reserve to inject more liquidity by expanding the balance sheet in the T-bill market on the margins and lead to an even higher year-end target. Right now, we're looking at a market that is taking everything in stride, up about 0.1% on the S&P ahead of the open. You can see 10-year yields now back down 4.43%, hovering just sort of oscillating around this level as people anticipate what Fed Chair Kevin Warsh might seem like in crude prices just above where they closed yesterday as people take a look at that MOU and what might ultimately happen or not. This idea of can we say the all clear really has been sounded for this war and that oil prices truly are going to be on a straight path lower.
The signal from the presidency wants this to end, but he just said in the last hour or two that if he doesn't like what he's seeing out of Iran, he's willing to restart strikes. Now, obviously, that's going to be rhetorical deterrence that the president is setting, but if you look at this draft MOU, certainly they want not just the Strait of Hormuz to be open, but willing to give Iran waivers so that Iranian crude could be hitting the market.
Yeah, people are going to be looking for all of these details to really understand what's in that. Less than an hour from the cash open. Here's where the action is. It is in the individual names. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with SpaceX on track for a fourth straight session of gains. Shares up 2.5% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, now pushing SpaceX past Amazon when it comes to market value. And the gains have been so dramatic that Elon Musk is apparently nearly a third of the way to a $2 trillion. That's according to our Bloomberg Billionaires Index. And as I said earlier, maybe we need to rethink the name. Turning to Lionsgate, those shares are falling 6.3% in the pre-market after Netflix came out and disputed a report that it was interested in buying the studio. That speculation had caused the stock to surge, though it's now giving back some of those gains. But the idea was that Lionsgate could be the next target as we continue to see this wave of consolidation in the media industry. And we end on Lazy Boy. Those shares are soaring, up 17% in the pre-market after it blew past expectations for last quarter and delivered an upbeat outlook. And retail sales confirming that momentum, with furniture sales up 1% in May compared to the prior month. Lisa.
Everyone just wants to relax. Thank you so much. Great work, Ira, as always, for that counting down to the opening bell. Here's the trading diary for the day and week ahead. 10:30 a.m. President Donald Trump delivering a press conference from the G7. 2 p.m. Eastern, a Fed rate decision, followed by the big one, hearing from Fed Chair Kevin Warsh himself, the news conference that could set the tone for his tenure. And Thursday, a Bank of England rate decision, plus another round of jobless claims. Friday, U.S. markets are closed for the Juneteenth holiday, and the U.S. and Iran are expected to sign an interim peace deal. Let's turn back to the Federal Reserve. Investors widely expect the central bank to hold rates steady today, and many are not expecting a policy change for at least a full year. Blake Gwinn of RBC Capital Markets writing, a flat Fed path is a very unnatural equilibrium for market pricing. Blake joins us for now. Blake, great to see you. Thank you for being here. You're not wrong. And right now what we're seeing in markets is real unease, at least if you take a look at the 2-10s yield curve, suddenly the flattest in more than a year, as people try to parse out what does this mean for a Fed to be on hold. We're used to worrying about a hike or a cut. Why is that so uneasy?
The market wants a bias, right? I mean, if you look historically at the spread between Fed funds and 2-year rates, it's historically around 40 basis points. So, we've gone through a few times where the market has held on to a flat pricing, but it's only when rates are at the zero lower bound and there's really nowhere else to go. So you saw how quickly we kind of moved from a cutting bias to this kind of hiking bias. And you saw periods over the last few years where even though the Fed wasn't actively cutting, the market can just hold on to this downward slope and this expectation for cuts. And even when the Fed's not cutting, they just kind of roll it forward. So I think that's what markets are going to do now with hikes, that even if the Fed is on hold, even if they're not hiking, we're just going to keep rolling forward those expectations for hikes.
You know, the real story, though, might not be necessarily in the Fed policy rate. And this is what Mike Wilson was getting at. The idea that the Fed had been shrinking its balance sheet, sort of quantitative tightening, and then it stopped doing that earlier this year. And it started to expand it out just a little bit. The idea of injecting liquidity into the market that Mike Wilson said has been instrumental in the rally. That stopped. Do you think that that's going to restart under a Kevin Warsh that in the past has said he wants to shrink the balance sheet?
I think it's going to be difficult. The same way that I feel about his effect on rate policy is that, he's not one man. This is a committee, and I think those decisions are still going to be made by a committee. And I think that committee has made very clear that they're uncomfortable with reserves getting too low and some of the effects that come with that. And I say it's clear because last year they started buying bills again in December. So we know that they, really do not like to see pressure in those funding markets. So he's going to have to convince the rest of those committee members that this is actually the right path. And I think you've seen Mirren, now he's no longer there, and Lori Logan have kind of presented these ideas of here's some things that we could do to get the balance sheet smaller. I don't think anybody has endorsed those, but they're just saying here's a menu of options. And I think even, Logan, when you kind of read through her speech, there's a lot of downsides to a lot of these things. So it's really a cost-benefit analysis. I think it's something that's going to take a long time. Ultimately, I don't think they're going to get major changes on the balance sheet. I think it's going to be some small changes here and there, but no big wholesale changes in the way they operate the balance sheet.
Is everyone hyping this up too much? As you say, everything is going to take a very long time. Is this going to be almost maybe a pretty boring meeting?
Well, I mean, it can't be boring with Warsh speaking because we just don't know. And I think, we don't have a benchmark in the way that, when Powell is out there every month, we can kind of look at the changes from the last time he spoke and, kind of sense where he's going with things. Warsh is a bit of a wild card because we don't have that prior experience. Now, I would point this out about his prior comments. One, he was campaigning for the job, and we know what it takes to get the job. He had to sound dovish. So we don't know, now that he has the job locked up, we don't know how much of that goes away. The second thing is he was talking for himself. Now he has to represent the committee if he's doing the job right. When he speaks at the FOMC meeting, he's not speaking his own views, he's speaking the committee consensus. So that could sound more hawkish. And the third thing I would say is he does, I think, run the risk. If he comes out very dovish and the rest of the committee is moving hawkish, he almost marks himself as irrelevant right from the beginning. I don't think he wants to undermine his own credibility by saying, I am way out of consensus with the rest of this group.
So there's a risk that he just is a chair in name only.
I mean, I would hesitate to go that far, but yeah, I mean, he's one man on a committee at the end of the day. Now, they have some power to set the agenda, to kind of, set and frame how things are being discussed, how the research is being done. But at the end of the day, these decisions are going to be a vote with the rest of the committee, and we know where they're going. They're going to move more hawkish in this meeting.
Will he take questions?
We've been debating on how many questions he actually takes, what time the press conference actually ends.
So what's the
I think
over-under?
3 p.m. is probably the over-under here. I mean,
really?
I would not be surprised, given everything that he said about communication. One thing that he can unilaterally change is just take less questions. Or the questions he takes, he gives very brief, very succinct, short answers. So I wouldn't be surprised to see a lot shorter press conferences than Powell.
Blake Gwinn, thank you so much for being with us. Blake Gwinn of RBC Capital Markets. And thank you for making it exciting, because it is going to be exciting later today. And coming up at 1:30 on Bloomberg Surveillance, the Fed decides. Bob Michael of JP Morgan, Subhadra Rajappa of SocGen, Rich Clarida of PIMCO, and Kate Moore of Citi, because all of them, Annmarie, think that it's going to be really interesting. And that, I think, I agree with them.
It's definitely going to be interesting, because the first meeting of Kevin Warsh, it's the tone he's going to set. But if things are going to take a really long time for where he wants to get to, from point A to point B, then maybe everyone is overhyping how scandalous he may be. Does it dot? Does he not dot? I love Torsten Slok. The number of words in the FOMC statement likely going down. So the statement comes down. I just want to do the word count.
Yeah, a lot of people are looking to Polymarkets for how long is the press conference going to be, whether there is a dot or not to dot, and how many words will be in this statement. A real question also just about what kind of tone he's going to set in terms of will he be establishment or not. After the press conference tomorrow morning, we will get all sorts of insight from Ed Yardeni of Yardeni Research, Scott Pronert of Citigroup, former Kansas City Fed President Esther George, and Charles Schwab CEO Rick Wooster, as we parse through exactly a new regime on the Federal Reserve, as well as a new regime in markets amid a tech boom and revolution. All of that coming up from New York. Thank you so much for joining us here on Bloomberg Surveillance. Good morning.